start recording. I will edit the video later on. Alright, let's wait for a few more people joining the live stream before we actually get started. So I don't have to go over things twice in case someone's missing it. I'm not gonna be restreaming it on YouTube because last time it simply didn't work out. So now we simply gonna stream here on Discord, and I'm gonna be sharing the live stream later to YouTube. I hope everyone's enjoying the new DR Academy. So the new drive indicator here by the master, not this one right here, where you can get more data and more insights. Basically the newest version of the DR IDR indicator, where you can use those little setup function here, where you can calculate your win rate and stuff like that. But we don't want to see that right now. Alright, so let me actually turn off the setup section. We don't want to see that. So overall, we can see the statistics for the ES1, the futures contract. Over the past 226 sessions, we had an overall success ratio of 79%, meaning that now we got our bullish confirmation long right here on this candle here at 7:40 a.m. New York local time. At this low is basically going to be the low for our ODR session. The ODR session is almost over since it already hit 8 a.m. And see what they do again. They pumped it up right up to 8 a.m. 8 a.m. candle opens up, new hourly candle, reversal back inside of a little fair value gap. But we are going to do our analysis for what happened today so far very soon. All right, let me actually get rid of all the stuff here, and also get rid of the calculation right here because we don't want to see that. We are mechanical manual traders. All right, so that's all done. I am also going to be using the multi-time frame volume imbalance indicator, the volume imbalance indicator that I created a little while ago. There's also a video about how you can use the multi-time frame volume imbalance indicator for free on YouTube. Alright, if you have any questions, make sure to send them into the chat here on Discord so I can answer them. Alright, so the multi-time frame volume imbalance indicator, we're going to set it up to see all the extended volume imbalances right now. And we are going to display the 10 most recent volume imbalances on a 5-minute time frame and see how well that worked out. We had our volume imbalance right here, and during the Asian session we just wicked inside of it. We left behind a volume imbalance right here at our confirmation candle right here from 7:40 over to 7:45, and we basically created a double volume imbalance if the candle is going to close like it is right now. We see that overall we have lots of volume imbalances that are in this area that could potentially support price from not continuing further down, but we also have a few left behind volume imbalances right here that could also be very likely filled today. We will see, because overall we are still trapped in this, let's say, higher, relatively speaking. That's what we're going to use the next free indicator for. I also coded an institutional level indicator. Basically what this indicator does, it's going to display major key levels or institutional levels on your chart. So for example, to use this indicator, you can simply, how I'm going to share the indicators, they're all private scripts, so if you want to use them, simply go over to my YouTube channel. I will post a link to my YouTube channel quickly. That's my YouTube channel is the accumulation zone. And if you go into my videos right here, the video called multi-time frame volume imbalance indicator, you click on that video. Hang on, let's get rid of the ads. And right here in the description of this video, you will find the links to the institutional levels indicator, the importance of time indicator, daily highs and lows indicator, and the new multi-time frame volume imbalance indicator. Make sure to give the video a like if you enjoy using the indicators. So let's go back to TradingView. So we basically set a key level, which would be 3,900, a double zero level, and we're still holding relatively strong above that 4,000 level. And the reason I'm pointing this out is because if we compare all three US indices with each other, basically, we can see that on a higher time frame basis. So let's quickly get rid of all the DR, IDR indicators. We don't need them on our comparison chart right here for now, and we go up to a 1 hour time frame. The difference we're going to see now is that, for example, Nasdaq is relatively speaking holding up strongly, forming some sort of a bearish bearish pennant to the upside, or rising wedge, we could say. Some sort. That's just the classical chart pattern. If we go over to the S&P 500 chart, we can see something similar. We can also connect the highs pretty much in one straight line. And if we try to connect the lows, doesn't really work out as well as it does on Nasdaq. But the main difference is the US 30 chart. On US 30, if we compare it right here, we formed, is it this low right here? This low, where's this low? Here. So on the US 30 chart, we already had a drop below this major low right here. So let's put this on a 1 hour time frame as well, so it's going to make more sense. On the US 30 chart, we already dropped down below the low that was created on Friday the 13th. Okay, hang on, let me do that again. I'm gonna grab the line here. Move below this low. We also consolidated up high, but we did not move below this low on Nasdaq. Right here, this is the low I'm talking about. So there's major SMT divergence going on. Also already for today, no, that was yesterday, I think. Yeah, that was yesterday. This high, that candle that was created during the Asian kill zone, basically. And yeah, relatively speaking, there's a huge SMT divergence theoretically for the S&P and Nasdaq index to follow up with what happened on the Dow Jones already on Tuesday, so yesterday. This could mean a 60 or 61 handle drop to the downside. Today we also have red folder news. So let's quickly check Forex Factory. Forex Factory. And today for the US we have PPI news on the calendar. So let me grab some more information about the news. Change in the price of finished goods and services sold by producers excluding food and energy. All right, we're gonna get those news at 8:30 right now, so we have 15 minutes ahead of the news. So we're just gonna wait. Hang on, let me close this. Core retail sales, PPI, but afterwards we don't have any major red folder news. We have an FOMC member speaking at 2 p.m. New York local time, and another FOMC member speaking at 5 p.m. But those are all yellow folders, so they're not having a very high impact. All right, so let's go over to the chart. That's the general structure that we're looking at if we compare all the indices. Currently, they look very different from each other. And, well, this consolidation up high here, if we look at it from a bigger perspective, we came out of this month-long consolidation here, basically. Broke to the upside, and now, relatively speaking, we're rather up high, forming some sort of a bullish wedge, pretty similar to what we see on Bitcoin currently. Bitcoin, relatively speaking, is also rather up high. And let's compare it to the US 30 right here. So in a bigger picture, we saw that we already had the initial drop here on the US 30 Dow Jones Index, but we did not see this drop yet on the S&P, neither did we see it on Nasdaq 100. So that's an interesting point to remember, because there's a lot of sell-side liquidity below this low right here, for example. So let's move over to our chart. We've got the key levels indicator on our chart. So we have the 4,000 level and institutional level right here, right below us. And for the ODR, we just confirmed bullish at 7:40 p.m. Let's see how many people are watching the stream. Yeah, there are enough people watching the stream, so I'd say we can properly get started now. So we have news on the calendar that pop up at 8:30, so I'm gonna mark up this line. 8:30 right here. So taking any ODR trades from right now, we could be checking the DR lens. So heading over to the DR lens, and we are selecting the ODR. We are confirmed long. The DR rule is, let's go for all, and we are choosing an option ODR right here. And we confirmed right now it is 7:40 a.m. New York local time. So we head over to the DR lens, which is part of the DR Academy. So 7:30, we're gonna get rid of those times for the confirmation. Between 7, right at 7:40, okay. So between 7:30 and 8 a.m. New York local time. So now we see the median standard deviation up. Standard deviation to the upside would be 0.7x. The median max retracement would be 0.1x. And the max extension median time would be 8 a.m. New York local time. So we should be able to see, which with such a late confirmation, we should be able to see, at least that's what the data would suggest. Right here, so we're going to use the standard deviations of our DR IDR. This is our 0.5 target. Our max deviation up would be the 0.7 standard deviation. Is that loading up? Nope, I made a mistake here. We're going to go for 0.5, get rid of this level, and those ones here. We're going to go for 0.7. That's the median standard deviation. So looking at what we're looking right here and turning on the multi-time frame volume imbalance indicator, we see that we also have a old volume imbalance up here. This is our Asia high because we had this massive candle here at 9:40 p.m. New York local time. So we will see how that is going to play out. We have a double volume imbalance that's currently holding some sort of resistance. But this would be the overall target that should be hit by 8 a.m. New York local time. So looking at the chart right now, we see that it's already too late, that we should have already hit that target based on all the backtesting results that are contained within the DR IDR model, basically. So 8 a.m. I mean, news are coming up very soon as well, so we will see how that is going to play out. I will definitely stay out of the market until the news are out, but up until then, we can look at a few other things and do some charting work. So we see that we have, who's talking here? Someone's talking, so please mute your mic if you're watching the stream, it would be very helpful. We just had CPI last week. Hang on, let me grab my calendar quickly. Last week on Thursday, we had US CPI news, but I mean, you're right, because we had British pound US dollar news on the calendar today. British pound CPI, core CPI red folder news today at 2 a.m. New York local time. And I was actually able to catch a very nice trade based on my own trading strategy on the pound US dollar. So this morning I had my analysis. I looked at the previous New York Hillzone high, the Asian high, and then leading into the 2 a.m. news, I was sitting in front of my computer and I saw this bullish candle right here, bouncing off the VWAP that's resetting at New York local time midnight. We got a bullish stochastic RSI crossover, and my indicator indicated a bullish momentum. That's the Scarpa Pro indicator right here. And yeah, based on this movement to the upside, I placed a very tight stop loss of 10 pips, and I let it run for a 3-to-1 risk to reward ratio. I secured some profits at around 2% profit, so I just had a very small runner running up to a free risk reward after this 5-minute candle close, which already hit my profit within 1 minute of the CPI news being released. And then I got a few other continuation entries, just basically based on the stochastic RSI crossover and my indicator. We pulled back. Who's got their microphone not muted? All right, I'm gonna quickly server mute you, so it's not gonna be annoying for everyone else. Another entry here and another entry here. Right now we're starting into the new New York Cal zone. We got a new stochastic RSI crossover, but my indicator did not confirm this entry. So a few beautiful trades today on the British pound US dollar. I only caught this one and I caught it today because I was happy, but there were plenty of other signals. But let's go back to ES because that's what we're here to analyze. So overall, I'd say for the overnight range, I wouldn't be looking for any continuation setups. We could be looking how we are going to react coming out of the IDR, DR low for the overnight range right here. I'm gonna color this in blue for London. I don't know, London is just blue for me, always has been like that. So if we go over here, we see there is a support level in play, definitely, no questions asked. We have two equal lows right here on a 5-minute time frame, which would be considered, let me draw this up, sell side liquidity, equal lows. We're gonna color this in red and we are going to plot this in the snap on the right side, but in the middle. All right, so that's our sell side liquidity overall. That's our London DR range. We're gonna leave that up until 8 a.m. because we have some news on the calendar today. So we will see how this level of support where we bounced off at the beginning of the London kill zone or the ODR range, how we're going to react from this level basically. But overall, we could be looking at a little trend line along this trend that has been broken now, retested, and we could see a potential pullback into our DR range. But that's all really depending on how the news are going to play out in less than 10 minutes. We also have our Asia high sitting right up here. So we're gonna draw this one up. Asia high. And we have our Asia low sitting right here, which is also our current day's low. Yep, this is our daily low as of right now. And Asia high is also equal to our daily high. This is not very typical most of the time, especially in London, because London just stayed within the Asian range. Of course, not the 80-hour range, but overall inside of the Asian range, because at 9:30 or 9:40 p.m. New York local time, it's mostly the Asian market that's trading, or maybe people in America that stay up a little bit longer. All right, and actually trade the Asian kill zone. So let's turn off the drive and get rid of this line and get rid of, that's the institutional levels indicator. So currently we in between this 25 handle range from the 4,000 key level up into the 4,025 key level. Another thing that's interesting is, yesterday we took out our high that was formed on Monday basically. So looking at our week overall, we have our current week's high sitting right here. So we're going to be drawing out this one in time. This is our current week's high. This is our Asia daily high for Wednesday. This is our sell side liquidity below equal lows. And we already see the retracement break of the trend line played out. There's another example that played out very nicely today as well. And our current low of the week is also right here. So we have a daily low and current week's low. And we took out the sell side liquidity right here below our Monday's low. Hang on. Right here. This is just looking at the perspective for this week. So we took out our Monday. Let's actually draw a divider so it's going to make more sense and it's easier to follow for everyone else. Where's New York local time midnight? All right. And we opened up right Sunday, Friday, right here on this candle. So this is our new week. We can basically be looking at our Monday range right here from our high to our low as our opening range. That's at least what I refer to most of the time. So that Monday creates our opening range right here from this level down to this level. Basically also within the 25 handle box. We had trap volume short right here. And we had trap volume up high right here above our previous week's high. So this is our previous week's high right here that was formed on Friday. So we can draw this up as well. I'm gonna make it shortly here. Previous week's high, we took that out, consolidated above a institutional level and had a drop back below our 000 institutional level. We pulled back inside of our opening range basically. So let me draw this up and we're gonna highlight this with a green color for bulls being trapped long into the market above a previous day high. Referred to higher time frame traders here. And we're going to color this as red. So this is our opening range right here formed on Monday. We extended this range now on Tuesday. So let's go over to here and we're going for Wednesday, New York local time would be right here. So on Tuesday, we extended this opening range, creating a initial balance. And right now we are trading inside of our current week's high. And our current week's high is also lining up with our previous day's high. And that's a, let's say, a easy method of how you can draw out or map out important areas of liquidity. So we have our Asia high, which is currently our current day's high, looking from a smaller time frame perspective. So let's, because it's not fixed yet, we just simply gonna make it a dotted line. And we have our Asia low, current week's low. This was created yesterday. Daily low. Let me draw this up. Asia low. This is not our daily low. This is our previous day low. And at the same time, our current week's low. We have sell side liquidity right here with equal lows. And for today, yep, this is actually our daily low right here as well. So we have our range right here for the day. So let's color this in a different color. Let's make this gray. This hasn't been confirmed yet. We have buy side liquidity right here above our current week's high and our previous day high. So we're going to color this in green. And we have sell side liquidity below our previous day low, our current week's low, and below an Asia low. Yeah, Asia low. But the Asia low does not count into here. So we're gonna write current week's low and previous day low. So now we have the areas of liquidity that would be interesting for this week in a very simple manner. On Monday, we always form our opening range. Most of the times on Tuesday, we extend this range to one of the sides, either to the upside or the downside. We took out our previous day's high, previous week's high on Tuesday, and we quickly reverse from up here. So let's turn on the DR IDR indicator to see. Okay, someone has the mic not muted. All right, let me find out who that is. Okay, I'm quickly gonna mute you. Thank you. Now we don't have CPI news, we have PPI news. PPI is something different. to CPI. I'm going to bring it up on Forex Factory quickly. Today we have USD. Why is it not here anymore? Let me reload it quickly. We have USD core retail sales, PPI, and again retail sales. So it's not CPI, it's not the consumer price index. Really the key measurement for the inflation metrics from month to month. We have the producer price index basically. The change in the price of finished goods and services sold by producers. And CPI is the consumer price index for the consumers, like most of us, unless you have a company producing stuff. All right, we see we got a nice reaction further to the upside. Let's zoom out here to monitor our levels. Turn off the DR IDR because we are not going to use that right now. So we already took out our Asia high, or we touched our Asia high, which is currently our daily high. Let me drag all those levels back in again, because those are our most important liquidity areas of liquidity for this week. All right, let's see if the PPI news. Yep, okay, we broke above our Asia high daily high, so we're gonna mark this out as broken. And we are going to remove the daily high from here. The Asia high has been taken out, and we're currently forming a new daily high on a 5-minute time frame. All right, that's interesting. So let's see how this plays out. The news just have been released. Let's quickly check the British pound. British pound keeps continuing further to the upside against the US dollar. So that actually played out very well. We had our Asian range, broke it to the upside, pulled back to the VWAP, and a beautiful continuation move to the upside. Not a very nice setup on the S&P 500 right now. We can compare all our charts right here. So we could be looking at a pennant breakout on the Nasdaq on a hourly time frame. So let's go down to a 5-minute time frame here as well. And we go to a 5-minute time frame on this chart as well. And on a 5-minute time frame here as well, to quickly compare all 3 major US indices. So let's turn on the DR IDR and see if there was a nice London setup. So we also formed this double bottom here, pretty similar to what we saw in the S&P. And let's have a look at the YM. So the YM initially confirmed bearish for the ODR, for the London range basically, pulled back and walked its way back up to the upside. Did it confirm bullish? Yeah, we had a close above our DR high, so this was a false day, or a false day on the YM, the Dow Jones Index. And right now we see buyers push price up higher, but sellers are stepping into the market, very likely maybe because of those trend lines, resistance lines. But we will see what's happening. We broke through our previous day Asia high right here, through our Asia high. Let's see if we can also walk up to above our current week's high for next liquidity level, maybe around 40.50. This would be the next institutional level I would be targeting if we see a continuation of this movement to the upside. Is the stream full again? Oh man. It would be great if someone would be able to restream my stream if they feel like it. If not, I am going to upload a stream on YouTube in an hour or so. And we see, look, we just went above our buy side liquidity right here, our Asia high from yesterday, according to New York local time. And we did not go above our current week's high, which is right at the 40.35 and a quarter level. So let's see if we can break through our sell side liquidity at the current day's low right here, sitting at 4,007 3/4. So we see indecision right now, big wicks to both the upside and the downside. All right, let's compare our indices. Pretty much the same on YM. Nasdaq also just wicked to our line, basically connecting the most recent highs that we drew up on a higher time frame. Also now getting rejected, so we could be actually looking at this play that is lining up with the US 30 that already took out the low we created on Monday right here. Let me go on this chart. US 30 already took out this low, so we could see a potential drop to our previous week's. That's Friday. Now this is our previous week's low. So there's a ton of space further to the downside. And I don't like this consolidation movement here in a bigger picture. Also on a higher time frame, it doesn't look very appealing to trade. But we will see. So let's turn on the multi-time frame volume imbalances. So we see that we pretty much filled all those volume imbalances here on a 5-minute time frame. Let's have a look at the daily volume imbalances to see if we get any more insight. So we see we have a daily volume imbalance sitting right around this level, below our current week's low, our previous day low, and also below the 4,000 key level, which could draw the narrative that we might pull back. We also have a big 2 daily volume imbalances inside right at the level of 3,973 and 3,961. So that the narrative is definitely there to take out the sell side liquidity below here, fill this daily volume imbalance, because the next daily volume imbalance would be right at 40.75, somewhere around that level. We can also check for the weekly quickly. That's how easy it is to use the multi-time frame volume imbalance indicator. Weekly volume imbalances as well around this level. You see how everything's leading up to this drop. I'm not going to participate. I made my profits for today already, but we will see.
I don't know if you can be detail change or the schema, the start schema change. I still have to work on the actual requirement. So we did record the video last Thursday. I have to go through it and have the
Okay, quickly let me mute him. I don't really want anyone talking. You can ask questions anytime. There was no confirmation for the ODR. Okay, let me have a look. I'm pretty sure there was. Let me zoom in here. Turn on the ODR. I'm pretty sure there was a confirmation. That's the drive script. So we started at 3 a.m. up till 4 a.m. We had our DR high. On the ES1 chart, we had a clear stay confirmation for the ODR. We will see how it's going to play out. I don't think that the ODR low is going to play a important role because we have equal lows right here. We have sell side liquidity. It's our current day's low, and I'm pretty sure they are going to attack this pool of sell side liquidity since we already took out yesterday's Asia high and also our current day's high right here. So yeah, there's pretty much no real point. We got rejected from the next pool of buy side liquidity right here at our current week's high and our previous day high. And this is our current week's low, also acting as our previous day low, sell side liquidity. So we will see how we move on going into this week from our opening range created on Monday that took out our previous week's high already, triggering higher time frame traders into the market. Well, I wouldn't be too sure about the retirement setup. It really depends where you place your stop loss because there's still room for this fair value gap to be filled. And overall, I don't like the divergence between YM and US 30 because YM, Nasdaq, and S&P 500 because on YM, on the Dow Jones Index, we already took out Friday's low right here. And if we compare it to all the other charts, we see that we are still pretty far away from taking out this low here from, no, it's not even this low, it's this low. So there's so much space here to the upside. And I think we might actually see a break of this trend line with a continuation move further to the downside. The narrative is there because we don't just have sell side liquidity below here. We have a weekly volume imbalance. We have 2 daily volume imbalances right here 2 daily volume imbalances. We have another daily volume imbalance just waiting for us here, and let's go for a 4-hour volume imbalance. Also just inside of our sell side liquidity pool. Another 4-hour volume imbalance just above our current week's high. So we will see how it's going to play out. As of right now, I would wait until the bell rings at 9:30 before making any sizable moves. Since I'm not trading, I wouldn't be trading either right now. We had a beautiful, no, I don't think we had any beautiful setups for the ODR as of today. So I'm going to be turning off the multi-time frame volume imbalance indicator. On the news calendar, we saw that for the UK, the CPI information, the Consumer Price Index, the measurement for inflation, consumer inflation, was released, and it actually came out exactly as forecasted. So I guess that's something good. Dollar was relatively speaking a little bit weaker, and we had a beautiful rally to the upside right here. That's 2 a.m. and I got a beautiful signal from my trading strategy right at 155. We had a opening gap to the upside on this 5-minute time frame for a beautiful continuation move to the upside, and I took a few scalps out of this total move from our opening right here to our peak, 130 pips. Oh, all right. So that's pound US dollar. We had major news on the pound US dollar today. We have the producer price index news release today, and that could bring me to another great topic, because I really see it so oftenly that people, especially traders or beginner traders inside my community, miss out on important news events. For example, in the chat right now, someone was mentioning that if we don't have CPI today, and as a trader, if you're a professional trader regarding trading as your business, you should know what news are coming up, and having to check Forex Factory every day it's all right, but I always wanted a war calendar for traders on my wall, because then I could simply go over to Forex Factory once per month, list out all the important news. For example, I love trading the pound US dollar pair and the pound JPY pair. So what I did, I basically filled in this whole calendar for the whole month of January with the British pound news, the Japanese yen news, and the US dollar news. And now I don't have to check Forex Factory every day. I simply have to look up above my screen and I see my war calendar hanging up there, and I have all the news in front of me, and I can also track my performance. So yeah, I think it's pretty great, and I actually created a trading calendar. It's the first trading calendar on the market right here. It's not ready for release yet, and the prices are also not fixed. It really depends on how much I have to pay to get the calendars created. But overall, that's the trader's calendar. I can send the link into the description below. I think it's going to be great. You can track your performance. You have enough space to write in important major news events that are important for your specific day. You can basically create a whole handwritten database of the whole year, because what I find is that I don't like using apps for tracking my performance and stuff like that. I always pay for the subscription, but I don't end up using it for the whole year. But with the calendar, you can basically make a commitment, and I personally prefer writing on paper. It's just so much better. You write it on paper, you write it down on a high quality piece of paper, and it's done. You hang it up on your wall again, and you start your new trading day. So yeah, just a little shout out to the trading calendar. If you guys are interested, the website's not ready yet or not opened yet, so you can put down your email address to be the first one to know when the trader's calendar is going to be released. That's going to be a first come first serve sort of auction for the first 200 copies of the trader's calendar, and it's the only trader's calendar for day traders out there, at least a physical one. All right, let's go back to business. Let's go back to the S&P 500, and we still see there's not much happening. If we pulled back, we can actually check the DR lens quickly here. Go over to the DR lens. So we have a long confirmation. We are in the ODR range. We are on the S&P 500. And if we look at our distribution data right here in the distribution tab, we see that we have a mean standard deviation extension to the 0.7 standard deviation, roughly. We should have seen that by 8 a.m. New York local time. And median retracement after the 0.5 standard deviation reached minus 0.5x. Higher as, lower as, okay, yeah, so that's not really important anymore. I would be waiting for the IDR range. So we're going to see how this is going to confirm. But overall, the stats for Wednesday, the daily dashboard over the whole, all days, all Wednesdays, basically in that database, we have for the IDR, we have 96% of the times over the past 20 years, we had confirmed DRs. 73.5% of them hold true and were not invalidated. So a 73.5% that either the high or low of the DR is going to be the low or high or low for the session. So we are slightly tending to a long confirmed DR with the probabilities or the odds. If imagine it would be like flipping a coin, it would land on heads a little bit more often than it would on tails. Most of the time, pretty much 90%, we saw a retracement into the DR once it was confirmed, and 60% of the times we confirmed or we closed outside of DR. The average mean standard deviation to the upside would be 0.8x, and the standard deviation to the downside would be 0.7x, and on average, the RDR for today should be confirmed by 11:28 a.m. New York local time, which would be, theoretically speaking, right around here. So this is when we should see the RDR for today being confirmed. Don't you filter on distributions for day? Yes, but for the ODR, we got a super late confirmation at 7:40. I can show that to you quickly. So if we go over to distributions and we go over to the ODR, we have a long confirmation. DR rule holds true, and we got our confirmation at 7:40. Let it load quickly. 7:40 between 7:30 and 8 a.m. And we see that our median standard deviation to the upside would be 0.7x, and the max extension median time would be 8 a.m. New York local time, which is right here. That's 8 a.m. New York local time. So by this time, we should have hit our 0.7 mean standard deviation to the upside, which would be right up here. We hit it, but we did not hit it until 8 a.m. New York local time, where we had this pullback with the new hourly opening. That's why hourly, yes, I will show the DR lens once more. What do I want to say? Make sure to stay on track with hourly opens. There's also another indicator that I release called importance of time. If you tend to forget the 4 hourly opens, for example, so right here, those big thick white lines, they represent 4-hour candle opens. So this is when our last 4 hourly candle opened. We got this pullback into support for the continuation move to the upside. It's really interesting if you are a low time frame scalper and you tend to forget the 4-hour, when a 4-hourly candle opens up. The link for that is also below the YouTube video that I showed earlier, right here. Below the multi time frame volume imbalance new free indicator, I can copy and paste that link into the chat right here. Done. And right here in the description box below, there are the links for all the indicators. All right, so let's keep on watching our beautiful S&P 500 volume imbalances. Let's check back for the 5-minute volume imbalances and see what we're looking at. Lots of volume imbalances, double volume imbalances basically. right here, this area, we filled in all those volume imbalances with 3 big wicks to the downside, which could be a sign for a for what was it called again? Liquidity. Oh, I can't remember how Nindo called it. Liquidity absorption. So those big wicks to the downside could be a key giveaway or a dead giveaway for that liquidity below here has been absorbed. Unfortunately, we did not get below the sell side liquidity at our current day's low that was created right here. Basically the low right here, still doing the Asian kill zone. And right here at 335 during the ODR range was forming. So it's currently our ODR low that we could be looking at to hold support or either going to be taken out for a quick sell side liquidity grab. But overall, those wicks would indicate liquidity absorption, which could be a indication that price maybe wants to continue up higher. So we will see how that's going to play out. GBP USD is still running. Beautiful chart today. If you compare it to what we had on the, hang on, let me turn on the multi-time frame volume imbalances. What we saw today on the S&P 500, of course, it's tradable, but it's nothing beautiful compared to the price action we saw on GBP USD. We had our Asian range from beautiful continuation move to the upside, scalping a few pips here and there, making your profits wouldn't be too hard. All right. So what could we be looking at? Something interesting for the ODR range, that's what I drew up earlier, is this little pool of liquidity that was rated. We had 3 equal highs right here from yesterday 10:30 p.m. New York local time. And we formed the same equal highs pre-London. So basically we had the 2 a.m. opening when we had the pound the UK CPI news release. We wicked once, twice, and 3 times right to the tick on this highlight, on this level here, on this line. So let me make it a thick line here so everyone's able to see it, what I'm talking about. So we had 1, 2, 3, 4, 5, 6 equal highs right up here. And we also, something interesting, we formed a nice little trend line that held us above basically a basic trend line, nothing much to explain about it. But what we saw is first we triggered shorts into the market right here with this move to the downside, triggering shorts into the market with this massive move to the downside compared to all the other candles inside of this uptrend. And then with a even faster reversal stop hunt into above buy side liquidity, above all those equal highs, basically liquidating everyone that already hopped on short into this position or into this trade, quickly liquidating them. So I'm going to color this arrow in green. A quick liquidation stop hunt above our relative equal highs into buy side liquidity, and now triggering traders long into the market. Now traders and breakout traders especially want to see this thing continue moving up higher. But what do? Now that they took out the power of the sellers, basically, so sellers stepped into the market, they liquidated them. Now buyers are stepping into the market, and what's happening afterwards? They quickly, in a very quick manner, liquidate all the buyers that already basically prematurely jumped into their positions for a quick liquidation stop hunt to our 2250 low, forming another equal low, very likely to be taken out very soon. There's also a higher time frame volume right here. I think so, yeah, I think I saw that too. Let me turn on the volume imbalance indicator. I think, let's have a look at the hourly. Nope, the hourly, we had some beautiful hourly volume imbalances just around that level. Could be a reason why we actually held some support here. And let's go for, I think it was the daily, if I'm not completely wrong. No, it's also not the daily. Hang on. Weekly. Nope. Weekly gap right here. 15 minutes. Nope. Hourly. Okay, maybe I just have to turn on more volume imbalances. 1 hour right above here, hourly. I'm pretty sure I saw something up there too. We definitely had a beautiful 5-minute volume imbalance there. Yeah, that could be right. I'm just not gonna. We had a beautiful volume imbalance here on the 5-minute. I'm gonna go over to this hourly volume imbalance in a second. But overall, yeah, I mean, even without volume imbalances, it could have been very clear after triggering shorts into the market with a quick liquidation stop hunt above our equal highs into buy-side liquidity, just around the London Open, basically triggering longs into the market and quickly liquidating them with this drop to the downside, after which we just consolidated, formed some sort of a double bottom at the support here, where we also had a few volume imbalances. Oh yeah, that's the exact low. So if I turn on the multi-time frame volume imbalance indicator on a 1 hour time frame, we actually have 3 hourly volume imbalances, even older ones from last Friday and last Thursday, right around this level. So there was plenty of support right around this level to hold, basically. Someone's talking. Okay, server mute. Thank you. Let me do that quickly. If there are any questions, feel free to send them into the chat, and I'm gonna do my best at answering them, like every time. Okay, quickly gonna server mute everyone here that is not already muted. All right, let's check that price action on a 1-minute time frame to see what we could be looking at. So we left behind a beautiful fair value gap in here that has been filled in completely now for a potential continuation move for the downside. We will see how that's going to play out. Let me actually connect to paper trading. All right. So on a 1-minute time frame, what are we looking at? We pulled back, formed all those wicks here to the downside, but we did not reach our equal low sell side liquidity. On a 1-minute time frame, this also looks a little bit more attractive. We had those equal highs, obvious buy side liquidity. I think there's no one arguing about that. Triggered shorts into the market below this trend line with a impulsive move to the downside, a little bit slower move to the upside, liquidating all those shorts here, and again a even faster move again down to the downside. So let's see if we might get rejected from this level. I'm actually quickly gonna check. Nope, not the calendar. I wanted to check Twitter quickly to see if ICT is tweeting. All right, let's find out. Inner circuit trader. 40-30 wiped out clean once more. Random. See the difference in knowing when it will be whipsaw action and staying sidelined while it does short abrupt stop hunts. If I was making the S market right now, I would run it higher and roll over the doji called 5-minute basis. Interesting. So if he would be making the S&P, so that could be an indication for what he's looking for. I went over the charts again. I am neutral on the AM session. Be safe. Imagine, if you will, someone makes a bold claim of having Enigma, my personal algorithm. Imagine the same person trying to market it with my logo, my name, and they lose and run into drawdown on live streams with it. Then you compare what I do here. Here's your sign. There's your sign. Tag anyone who fits this description. All right, let's see who's been tagged. Rio Vinny. I am ICT, pulling the trigger, order flow. The master. Well, we will see. As of right now, I really feel like this whole DR IDR thing is legit. It's definitely a great tool for beginner traders, or not for beginner traders, but for professional traders to actually have to form their daily bias a little bit easier than it used to be before. ICT said he's off until noon today. Yeah, he's basically referring to the whipsaw action, taking out again buy side liquidity above the 40-30 level, similar to what we saw here. So we have the 40-30 level starting right here to our high. So this could be acting as major supply or basically resistance right up here at above our current week's high, which is sitting right here around which level? 30, 40, 35 and a quarter. We took out our Asia high from yesterday. We still have the sell side liquidity, which is currently our current day's low. And again, sell side liquidity below our previous day's low here from Tuesday, which is also our current week's low. So basically Tuesday formed a new low and a new high for the week after Monday created our opening range. Just looking at the bigger picture perspective. All right. So basically, there's nothing really that should trigger you to enter into a trade right now. ICT said he's staying on the sidelines, and the DR IDR is going to open up in 30 minutes. The RDR session starts in 30 minutes. It's gonna take 1 hour for it to be for this hour to close until 10:30, and then our average. Let's go back to DR lens. Give you guys a little showcase. So going over to the RDR, and we are looking at everything right here over to the distribution side of it. We see that we should see the confirmation. The average confirmation time is at 11:30, so just before noon. And 53% of them have been confirmed long. They held true for around 80%. Most of the movements, most of the time, the price action went back inside of the range, so there shouldn't be any rush. With almost 90% on, hang on, by day. Let's go for a day. Yeah, almost 86%. 11:31 is the average confirmation day for Wednesdays usually by the month. Unfitted, let's go for unfitted. Pretty much the same stats. So we will see the mean standard deviation to the upside is 0.6 and the mean standard deviation to the downside is 0.5. But roughly just before coming back to the charts, maybe around 11 a.m. New York local time would be the best play you could make to stop you from taking any impulsive trades that actually don't line up with your analysis or most of the other stuff. Your trading rules, basically. All right, let's see if we got something else from ICT, but I think he's off until the AM session is over. 34 wiped out clean. I can frame both a short and a long right here in ES, which makes the present market structure what? Which makes the present market structure what? Indecisive, staying on the sidelines. Consolidation, ranging. All right, let's see. Let's go over to our comparison chart where we compare all our indices. Let me quickly interval time and date range. Get rid of all the drawings and of the DR IDR indicator here. So overall, we're looking at a very similar price action. We also had a huge wick to the upside on Nasdaq. Let's start with Nasdaq because ES and Nasdaq are more similar than the Dow Jones currently with each other. So we see that overall on a 5-minute time frame, Nasdaq right here and our high right here. We have some SMT divergence going on. So this is our Tuesday's high, our current high of the week. Relatively to that, we formed a lower high. I hope you guys can see that. And compared to what we saw on the Nasdaq right here, Nasdaq 100 index, we formed a higher high. So there is a potential SMT divergence in play. Right here we formed a higher high, and on the S&P we formed a lower high. Is Lens EST time or local time? Lens is according to New York local time. I think, yeah, 100%. Let's have a look. Time of day when the confirmation occurred, 11:30. It wouldn't make sense. That's gonna be 11:30 a.m. I think in the smart money concept industry or ICT concept industry, everyone's already, if they gonna mention a time, it's always gonna be UTC -5 or UTC -4 in summertime. So that's New York local time. All right, so let's go back to TradingView and have a closer look here at the 5-minute time frame. Come on, there we go. Let me turn off date range. That's annoying. So basically we could be looking at our opening range from 8:30. We are going to imagine, I don't want to draw it on this chart right now. We imagine a high right here. We could set an alert for that. An alert right here and an alert right down here. And we can do the same thing here for the Nasdaq 100 index. So opening range, so on both of those charts we're still inside. Let's double check it with US 30. On US 30 it looks similar, but we also did not even get above our Asia high from this morning, basically from yesterday evening, according to New York local time, UTC -5 down here. And we already took out the low of our opening 8:30 a.m. New York local time candle. So we're just going to keep monitoring everything here. And if you guys have any questions or want me to showcase the DR lens or any other features with the new drive indicator, I can do that. No problems at all. GBP USD still running beautifully. Let's go over to Forex Factory quickly and have a look how the news release came out. So we have the core PPI. The forecast was setting at 0.1%. Previous month we had 0.2%, so it was exactly as forecasted. So that's something good. The core retail sales month to month were a little bit worse than expected, and also worse than the month prior to that. The PPI month to month also worse than expected. That's why it's colored in red here, and also worse than the previous month. And same for the normal retail sales and not core retail sales. So overall, let's have a look at the DXY as well, because this could also help with our analysis. I don't like to say just because news are bad or good that the market is going to react to it in a certain way. I think the news are a tool for market makers, or for the algo basically, to use the news as a tool for a explosive move to the upside, for example, by 100 ticks, and quickly stop hunt all the traders that are currently sitting in short. And it's the economic event doesn't really have much to say in that. I'd say it's all based on the setup and what the current market makers are doing. So for the ODR on the DXY, we also had a bearish confirmation. We see the stats for the DXY, the success ratio for the ODR sits around 71%, and the total stats, or the total success ratio, sits also around 71.10%. We pulled back. If we have a look that should be very obvious. I think I've done that a few times already. If we look at our volume point of control from this whole impulsive move to the downside, let it quickly load up. We should very likely see the volume point of control or a volume area high right around this area. It's usually the area of the longest period of sideways movement or consolidation, and we had this sharp drop here. We pulled back a little bit, filling in parts of a fair value gap that has been left behind right here for a continuation move further to the downside. So this is very likely where most of the orders have been put in place. Now I'm just curious why the volume profile does not want to show up. So from the move to the downside, from our high to our low, we want to see how the volume was distributed. That's right. On the DXY, we don't have volume data. That's why it's not showing up. But overall, we could say that this would be an interesting area for resistance. It played out very nicely. We came into it quite a few times. With your stop loss just above this high right here, above the 50 level for the ODR, for a scalp into sell side liquidity right here. Or also, okay, here we had a bounce below yesterday's ADR low right here. So ADR low, we came below it and immediately we pulled back up inside of our range, back into this fair value gap, very likely the volume point of control if we would have the volume data available here for the continuation move further to the downside. As of right now, let's have a look at the bigger picture. We took out Monday's low right here. Already has been taken out, so we are currently at the low of the week on the DXY. And this is our Friday's high. Take out right here. And this is our previous week's high, is somewhere up here, right above this consolidation. But we took out Friday's high yesterday on Tuesday on the DXY. DXY is a very technical pair. So if we have a look, we see a bunch of equal highs also right up here. Equal highs taken out above Friday's high. Formed a, what could have been a play here, where they move above buy side liquidity. We formed our latest swing low, short-term swing low right around here, forming a new higher high here. We did not break structure with this move, but we certainly break structure with this move to the downside. Also structure here. And now we could be looking for a pullback of our most recent swing here. Let me turn on the ICT fib retracement. We did not get, did we get to the 50% level? Let me have a look, 38.2. So we got to the 38.2 Fibonacci extension or retracement. And we almost got very close to the 0.5. So we had a fair value gap right here. Maybe some volume imbalances from right over here on the DXY. So looking at the DXY chart right here, just building a case for this drop. And some volume imbalance with market structure shift for the continuation move further to the downside into our ODR. And I'd say for a continuation move further to the downside, there's really not that much of a reason for it. Of course, it could just continue dropping now, since we already took out Monday's low, and we are currently at a new low of the week, low of the day, and low of the month actually. So this could be really interesting on the DXY if it's just continue plummeting, because if it does, we could be looking out for major upside on the British pound US dollar and also on the S&P 500. So always make sure to monitor the DXY and not just the 5-minute time frame. Of course, you can also do your higher time frame analysis on a 5-minute time frame, but yeah, overall I'd suggest you to also look at the daily 1-hour chart, because the low that we currently formed with a zoomed out perspective is the low of the month of January, the low of the current week, the low of the day. So all this is lining up. It's the lowest point we've seen so far in January. And we will see if it's just gonna continue making lower lows, pulling back, continue making lower lows, then we could have a upside potential on the British pound US dollar, Euro US dollar, Aussie, Kiwi US dollar, basically every US dollar correlated asset there is if the DXY keeps dropping. And since the producer price indexes came out a little bit worse than expected, we could actually see the continuation move further to the downside. We just had a beautiful rejection wick, so if this candle was closing like it is right now in 10 seconds, we could be looking at a beautiful pin bar formation here that filled volume imbalance right here, filled fair value gap right here. And as soon as we tapped this low, that was our low of the month, by the way, right here from Sunday, or basically Monday. This was the low of the month. We tapped right onto our low of the month and immediately got rejected, continued further lower, and yeah, there we go. We had that pin bar. If you're trading the DXY or any correlated pair, we should be looking at a upside continuation now. If it's matching up, especially on the British pound US dollar, that pair is usually pretty quick. Bullish stochastic RSI crossover, nice continuation. And overall, I mentioned it, if that candle is going to close like a bullish pin bar right here, we should see the continuation, and that's why being able to read candlesticks can be really handy. All right, so let's have a look at DXY. At our US indices comparison chart right here. So right now we're filling some sort of a fair value gap, but overall ICT is staying on the sidelines until ICT tweeted. Let's have a look. Hang on, I just have to check my phone if I missed something important. Someone's not muting their microphone. Tim, I will be delighted to server mute you. Alright, so let's have a look at ICT's Twitter. What he tweeted. If I were long, I am not in any trade. I would want it to run to Tuesday's high and clear 40.36 and then reach for 40.40. If I were short, I am not in any trade. I would want to see 14.10 or 4.008. Neutral buyers study those levels. So we're quickly going to be drawing up those levels. We already have most of them on our chart since DXY should be dropping hardly. Nice. If we go over to our chart right here, we have those levels already on our chart. We have our current week's high and our previous day high, which is the 40.35 level right here. 40.36 is what he mentioned. And the next target after that to reach for 40.40. So we're going to draw up a horizontal line right here. Let's make this in a green color for buy side liquidity. And if we were short, we could be looking at 4.008, which is basically the sell side liquidity that we also have drawn up earlier below those two equal lows and our current day's low as well. So it already matched up with ICT's analysis. And below that, what was the other one? And thanks for mentioning that ICT just tweeted. 40.36, 40.10, 4.008. Neutral buyers, study those levels. And I would have said the same. Beautiful. So this will also be sell side liquidity. We're gonna color this text here in red. It's still inside this range, so we're gonna wait patiently and see. If there again are any questions, feel free to send them into the chat here on Discord. There's also a higher time frame volume imbalance there. Oh no, I just scrolled up, so no, there's nothing. Alright, British pound US dollar pumping, DXY continuing lower with a momentum candle to the downside. Almost no wick here. What's the relevance of 4040? I'd say it's just the next round number level above 4008, pretty sure. I mean, we could be zooming out of our chart here on ES1, but overall, I'd say, nah, currently, this is the current high of the month at 40.35 for January. Also, try to remember those important points. So that's the high of the month. If we're going to break above this point, the monthly candle is going to be expanding further to the upside. And around the high of the month, we could be looking for reverse opportunities, because every time we broke the high of the month, this used to be the high of the month, we broke above it, rejection. High of the month, broke above it, rejection. High of the month, broke above it, rejection. Maybe I can says interaction failed. Maybe try it again later. I think it should work out. Otherwise, the button should be working. I'm just gonna give you the row quickly. Server settings on my second monitor. Maybe I have to update that. But it should be working now. Community. Did it work? Let me know if it worked out. All right, let's see. So we are at the high of the month. Our low of the month currently should be pretty low down there. Let's go to the 1st of January, the lowest point of January so far. So overall, we're in a massive bullish candle. I'd say that's the low that has been formed on January. So that would be 3814. Let's turn off the institutional levels indicator here for a second. So that's the monthly candle so far. Let's get rid of this line. That's not going to play an important role in this one as well. Relatively speaking, we're rather up high. So let's use a little lens here and zoom into current price action. Based on the DXY, we should see the continuation move to the upside. The DXY is still dropping. That's nice to see. Pound USD is also pumping. Let's compare our indices. All the indices are still within the opening range, basically, from 830. So nothing really important there. All right, so let's see. And thanks for bringing it to my attention that the button didn't work. I think there could be something wrong with it. So thank you very much. NQ, not ICT, tweeted again. So let's head over to Twitter. Just saw the notification on my phone. Not Forex Factory, not DR Lens. Where's there's Twitter. Sorry. Nasdaq not matching the S&P lows in the 1-minute chart. ES in fair value gap on 904, 1-minute candle with SMT on the lows. Okay, let's have a look what he's talking about there. So we are going to the 1-minute time frame and the low at the 904 candle with SMT there. Now I think I already know what he's referring to. Oh no, perhaps not. So let's simply go on the 1-minute time frame. Let's check out the 904 low right here. 904 1-minute candle. 904 1-minute candle. He's referring to this tiny little SMT divergence on a 1-minute chart. You can also compare US30, but US30 is sort of doing its own thing anyway. Relatively speaking, very low at 34 grand, 000 level. So he just referred to this SMT divergence. Overall, if we continue up higher, we would like to see this breaker block to hold right here on a 1-minute time frame to hold support, or this fair value gap. Of course, we have a nice little volume imbalance down here as well that could act as support or as a draw. No way. All right, so we see we just moved inside of it and we get an immediate bullish reaction to the upside. DXY still playing around. So let's see if this area actually can hold some support, because the next draw on liquidity would be the 40.33 level. And after that, our high at 40.35 and a quarter. And after that, if ICT were long, he's not in a trade, he'd be looking at the 40.40 level. Beautiful bullish engulfing candle here at 9:24. Market's about to open up in 6 minutes. I think I'm gonna be on this live stream until, what's the time now? 3:25. I'd say 3:45 my time, so roughly 20 more minutes, because I have a meeting to attend to regarding the trader's calendar. I'm really excited for it. So let's see what we're gonna get until then. So we would be looking at this bullish breaker block right here to act as an area of support on a 1 minute time frame, based on the SMT divergence we saw between Nasdaq and and the S&P 500. But that's really, I mean, it's not really a significant low. I mean, we could compare those lows right here. This was the low right here, right around the 8:30 opening. I mean, I'm not sure why he's specifically drawing out this low. Maybe because we had a breaker block, a bullish breaker block right after it. So we will see, because there are lots of SMT divergences throughout the day between those pairs, especially when looking at a 1 minute time frame. So let's see, we have a 1 minute breaker sitting here. I could already see ICT's tweet, or dose basically, entering right here on this breaker block, taking it further to the upside. So let's be patient. We have market open in T minus 4 minutes. So let's see. Our charts relatively look the same right now. Further to the upside. If you get a pullback into this area, I'd consider taking a paper trade. See all those equal highs right here? I don't like that. Equal highs right around this level. Equal highs right around this level. And equal highs right around here. Just bringing it to our attention. Again, if there are any questions regarding the live stream or regarding the S&P 500, the DXY keeps on dropping. We should see the pound pumping and pumping after a quick pullback right at 8:55. New hourly candle opens up. Buyers take control. Price is moving up higher. All right, ES 1 minute time frame. So ideally, we would like to see this thing hold support. Of course, entering prior to 9:30 is pretty wild. We also have, no, we don't have equal highs on the, I thought I'm in with the paper trading account. Let's take a trade based on this breaker block with the buy side liquidity above us. Our stop loss is going to be placed below, one tick below the slope, and our overall take profit target would be at our previous day high right up here. We can add one more contract right inside of this volume imbalance. See how we go. Very likely gonna get stopped out a few minutes before market open. That is only paper trading, and I wouldn't recommend taking this trade with a live or prop firm or funded account whatsoever. This is just testing, watching price specifically. So let me have a look on my phone if ICT tweeted something new. It doesn't look like it right now. Other than that, it's last post based on the divergence. Nope, no new tweets from ICT. Let's see how that's gonna play out. Equal highs. Let's make this in white. Equal highs. Let's see if we get triggered with this volume imbalance down here. Of course, we have plenty of fair value gaps, volume imbalances that could be filled down here, so we will see. This was just a trade based on, and we see we got a beautiful reaction of this volume imbalance. We have market open, so we will see if our stop loss is being targeted or not. It would be great if our tight stop loss here would hold actually. Let's wait and see. Let's wait and see what's the DXY doing here quickly. And we're about to get stopped out. DXY is starting to curl back up. If that tight stop loss of 12 ticks prior to the market open is going to hold, that would be great. Okay, we see Nasdaq is pumping up and leading the move already above the highs right here. Let's see. The S&P is lagging behind right here at market open. So let's see how that's going to play out. I think it's very likely that price is going to jump through all those equal highs that have been put in place prior to the market open, with our target above our previous day high. We got a beautiful reaction of this volume imbalance right here on a 1 minute time frame. We had a bullish breaker block. So we will see. Let's add a contract to it and scalp. So we're about to take out the first equal high. I'm going to drag my stop loss closer to my entry. And right here, we're gonna take off the first contract. All right, and we see that Nasdaq already took out the high right here and now starts to curl back. Let's quickly move our stop loss further to the downside. I want to protect this position by all means. So let's see. Might not work out. We see a S&T divergence between Nasdaq and S&P right now, with lower highs on the S&P and higher highs on the Nasdaq 100. We also have lower highs on US 30, but US 30 is, yeah, we see an immediate rejection to the downside. So this could be, yep, we are taken out of this trade. It did not play out. So let's see. Let's get rid of this sell limit and look for a possible continuation move further to the downside. We have plenty of bullish fair value gaps we could be reacting from. But I mean, we took out the 830 high on Nasdaq. So this could be a sign for bearish divergence for a continuation move to take out the 830 low. We will see immediate buyback up. 40.20, also a 5 minute fair value gap that we are currently inside of. The DXY looks like it's forming a short-term low right here. Pound US dollar basically doing the exact opposite like expected. And an immediate buyback up. So let's see if this is going to be a quick. I mean, yeah, if you'd be looking at S&T divergences, you'd be already seeing the next one, because we formed lower lows again right here on the S&P, and we formed equal lows right here on Nasdaq. So this could be your next potential S&T divergence right here. You need clear rules for the S&T divergences if you trade them. Otherwise, it's going to be a little bit loose. Okay, so our stop loss was just a tiny little bit too small with 12 ticks. Pretty sure a 20 tick stop loss would have worked out well. So let's see if we can still breach through those equal highs here, or we continue further to the downside. So let's have a look in a circuit trader. Any new tweets? Yes, and fair value gap on 904, 1 minute candle with S&T on the lows. Yeah, that's about right. Okay, we already have those levels drawn on our chart, so there's nothing really new. No more news up until, okay, 9:15 a.m., 9:30 a.m. GDP, CB leading index. Then at 10 a.m., so in the next 30 minutes, we get business inventories and the NAHB housing market index. Beige book at 2 p.m. New York local time, and then a few FOMC members speaking later during the PM session. But only yellow photos. We already made it past the red candle or red photo news. So let's go over here and see how that's going to play out. Get to the upside right here on the DXY. So we will see if we actually pull further back, because remember what I said earlier, this is the current low of the month here at 101,529. It's the low of the month. Alright, so again, an immediate reaction to the upside, even more S&T divergence forming now, with the S&P making a new lower low, and it's not matching up to the to the Nasdaq. So based on that S&T divergence, I'm gonna get into a little paper trade right here. Our stop loss below the slow for a right here 3375. Pretty wide stop loss with our overall profit target above our previous day high. Should be right around, yeah, perfect, that's matching up. Of course, those are no professional trades, not based on DR or any of the strategy rules. It's just me looking at price action, simulating a few trades. The ICT just tweeted, no Tuesday high is the buy side liquidity. It is likely next to the docket. See how neutral bias invites shit market structure. So ICT just tweeted those two tweets right here. Let's go over to Twitter, refresh the page. No Tuesday high, buy side liquidity is likely next on docket. We had this on our chart a good while ago, and again, we're gonna be stopped out, far out. That's why staying on the sideline is beneficial. But this is very likely gonna be our next target. We can get rid of this red line. This gray line right here is gonna be our next round liquidity, followed by 40-40. So let's move our alert up there. Again, US 30 being the weakest out of all of them, already at the lows that were created right around 8:30 and 8:45. So let's see if we... Let's have a look at the 5-minute time frame. Just fill in a small little volume imbalance here, this little gap. We had the initial support right around here that we could be looking at, but overall, shitty price action, shitty wicks and consolidation indecisiveness. We gotta wait until 10:30, so roughly 50 more minutes for our DR range to form. Especially if you're new to DR and the whole ICT world, I would not really be considering taking any trades without a confirmed DR. And if you got lucky and you got one of the spots for the DR drive or DR lens or the master or the bachelor, I think there's still a few spots open for you to sign up for if you're really interested in all the data. In my opinion, it's nice to have, but it's not really necessary. Really depends on your trading style, because the data is also not going to make you a profitable trader that you want to be. You can only do that yourself by fixing yourself, your yeah, your emotions and all your bad decisions that you're making during the day. Just because you have the data there does not stop you from taking bad trades without proper reasoning. So you can spend 10 grand on the most advanced indicator or anything else, but if you don't have structure and you don't treat trading as your proper business, I mean, most of you guys want to do it full time, but when you do it full time like me, you realize it's an actual business. You have to treat it like a business. You have your working hours, and it's not just a fun hobby you do on the sidelines anymore. So yeah, no matter how much money you spend on indicators, it's not gonna make you a profitable trader. So yeah, I guess that's gonna be the quote for the day. But of course, it's always can be a helpful tool for you to reach that goal, but you still have to execute it. If you can't execute it live, it's not gonna help you. And that's why I also think a system should be very easy. Looking at a 1 minute time frame, having to draw up liquidity, equal highs, blah 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 here and there, it's hard. It's really hard. You gotta be at that professional stage by then before actually considering trading on a 1 minute time frame. I mean, it's super easy to trade on a 15 minute to 1 hour time frame. And if you start to make consistent profits throughout the day while you're still at work or something, because you just got to check the chart every hour, and not even every hour because you still know what the chart's looking like. So yeah, I don't know. Start from the top and from the higher time frames work your way down to the lower time frames if you need it. But most of the time you realize that you don't even need it. Let's have a look at the DXY. We got our pullback right below our previous low of the month with a nice rejection wick here to the upside. Our IDR is forming right now as well. We get this bullish reaction right here. Let's see if we see some more SMT divergence. Looks like US 30 or the Dow Jones Index is now actually leading the race. Okay, no, not really. So let's see. All right, let's just be patient and wait and see here. Someone's still talking, Sufyan. Hello. Hello, Sufyan. Server mute. Yeah, so overall, interesting. And by the way, if I think maybe some of you guys are curious, I also only subscribe to the DR Drive and DR Lens membership. I just wanted to, because I'm super curious by nature, I wanted to see all the data and actually see if it's lining up with the data over the past 20 years. So yeah, I'm also super happy that I got the permissions to mute people on the server. So that's great. But overall, yeah, I only got the basic package for 35 bucks a month. I think it's sold out by now. So we will see if they're gonna be opening up more slots for the lowest tier to join. Let's see. And we get this move to the upside. Okay, our 830 high looks like YM is currently about to lead this move. Like ICT mentioned, this is the next target. Of course, finding your entry then is the next question. Of course, we had a beautiful volume imbalance down here that we closed inside of. Want to and open up for the third time right here. We had a 1 minute fair value gap on the 5 minute time frame we had a 5 minute fair value gap right around here, and also a 5 minute volume imbalance. So we will see. We just took out all those equal highs here basically, right here, right here, right here, and immediately we get the rejection further to the downside. I am from Germany, and I've been trading for 4.5 years now. I'd say professionally trading for, I'd say, 1.5. Been trading most of the time in Australia, but now I'm enjoying the European time zone because it's great. I wake up early in the morning, 8 a.m., London session starting up. And yeah, later on after lunch, New York's opening up right around 2 p.m. local time, so that's great. Perfect time zone. In Australia, I was used to staying up until 10:30 p.m. at night for the New York market or the New York session to start at 9:30 New York local time until the DR was confirmed. For example, it was already 30 minutes before midnight, and just it's hard if you want to trade New York. Let's see. Let's watch what the DXY is doing. Still getting rejected from this level right here. Try to move further to the downside, but bias stepped in just by reading this candle. I think we're gonna see the continuation of this move further to the upside. We will see. I could be terribly wrong. We took out all those equal highs here on the ES and immediately got that rejection for the continuation further down. So we will see. Let's check if ICT had made some new tweets about the shitty price action we see today. No Tuesday high buy side liquidity is likely next on the docket. Forex Factory, we already checked all that. And again, if you want access to any of those indicators that I created and presented, I think last week, I'm gonna send the link to the YouTube video into the Discord chat right here. There are all the links to the private indicators, for example, the institutional levels indicator. I can do a quick showcase while we are waiting for the shitty price action to be over. Let's get rid of all the drawings and the DR, IDR. We've got the multi-time frame volume imbalance indicator. That way you can basically display hourly or volume imbalances from all time frames on your chart. For example, the daily volume imbalances. We would be looking at the next daily volume imbalance right around 39.91 and right around 3973, and further to the upside the next daily volume imbalance would be right at 40.75. You can quickly go through all those volume imbalances within the matter of a few seconds. If you want to see 5-minute volume imbalances, that's what we're currently looking at. You can choose different styles how those volume imbalances are being drawn on the chart. You can, for example, deselect this third option down here, and now you're only gonna see volume imbalances that haven't been filled. And the volume imbalances are considered as filled as soon as one wick moved inside of the volume imbalance. I have to update the script to actually make it work according to the master's rules, but yeah, we will see. It's gonna take a little bit of time. Extend all volume imbalances. Here you can modify the maximum amount of volume imbalances being displayed. So if you only want to see, for example, the last 5 volume imbalances, here are the last 5. Looks like a little bit more than 5, but let's assume it's only 5 volume imbalances. So right around those lows that were created during the London kill zone that we rejected from. And I mean, look at this wick zone. We're looking at a range of 53 ticks here where it's just going up and down, up and down, up and down, up and down. So everyone who actually took a trade so far, I hope you made some profits. Otherwise, I feel for you. So, but overall, the multi-time frame volumes indicator, if you find any bugs, just send me a message on Discord and I will fix it. Other than that, I think it should be working well. I've been using it for the past 1 week now, and didn't find anything disturbing, you can always double check the volume imbalances unless you go into a higher time frame. Then you simply go to that higher time frame and, for example, use a chart side by side and compare it. If you find something that's off, it's most of the time because of the maximum amount of volume imbalances displayed. And that's a multi-time frame volume imbalance indicator. We also have the institutional levels indicator right here. The institutional levels indicator, once you plot it onto your chart, it's not going to show up anything. On the S&P 500 chart, you have to select a major key level most of the time, the closest level. So for example, right now we're at 40.25 on the S&P 500. So if we round down to the next double or triple zero level, we would have to type in 4,000 here. And now this is gonna be used as our bias level. And now we're gonna create 4 levels at for every 100 handles, 50 handles and quarter handles, so 25. So for example, if I'm getting rid of those alerts that still have been triggered since the 8:30 opening, so we're still inside of our 8:30 range, remove. So for example, here we now see the quarter level exactly at 40.25. Here we have our major key level, the 000 level, 40.50, next 25 handle box at 40.75, and the next double zero level, 40.100. So yeah, it's pretty rare that we come by a 000 level. That's most of the time why it's actually playing a important role. Good example, for example, would be the 3,900 level. We moved up by 25, 50, 75 handles basically. That's also a great way to measure ranges just by looking at your chart without actually having to drawing up the measurement tool every time. You can simply put price action in 25 handle boxes, also without having to draw the boxes. 25 handles, 25 handles, 25 handles. So for example, on Monday we moved up by 25, 50 handles, and we dropped down by 25, 50, 75, right back to our 00 level, key institutional level. Every time we came below it, we immediately got rejected further to the upside. We had this consolidation below it here. We opened up the London market, the New York market, made a expansion by 25 handles roughly to the upside, pulling back again by 25 handles below our 00 level, 3,900, for the continuation move for 25, 50, 75, 100 handles to our next key level, which would be the 000, 4,000 level. And basically since then, we haven't really expanded the range from the 40.25 level down to the 3,950 level, so basically 75 handles. Of course, our high right here, so we could be looking at this range, 100 handle range. So we can clearly see that this is some sort of a sideways movement compared to this rather quick expansion to the upside. So that's what you can use the institutional level indicator for. Just gotta make sure you use the correct base level. And if you use it on Forex charts or anything else, the information is in those information buttons basically. You just have to hover over them. You're gonna see everything. And I think the last indicator that I wanted to talk about would be well, let's see what happens on the chart first. We seem to hold some support here, but overall it's just weak city. We came above our highs again right here and again being rejected. We will see maybe one of those fair value gaps right here, but these fair value gaps are going to hold some support. Nasdaq looking pretty much the same. No proper divergence forming right here. I mean, yeah, other than higher lows right here. And okay, now it's also higher lows. Yep, higher lows, higher lows, higher lows. Yeah, pretty much the same. So no actual divergence. Let's go back to the indicator. It's the importance of time indicator because I tend to forget when 4-hour candles open up. And for example, also hourly candles, because if you lose track of the higher time frames on the lower time frame, and you're, for example, in a long trade just before a new 4-hourly candle opens up, you want to be aware of it, in my opinion. And also for the 1 hour ranges, it's very simple tool that helps you stay on track on a lower time frame, especially if you're scalping a 1 minute time frame. Imagine you're in this trade and you, for example, miss that a new hourly candle open up and boom, the whole movement of that last hour gone. Of course, you can also just watch the time and remember when new 4-hourly candle open up, but it's just a little helping tool that might aid you. You can hide it and unhide it. Very simple, basically. I think that should be all. Multi-time frame volume imbalance, importance of time, institutional level. And I've also made a small little indicator called highs and lows right here. That's basically showing you your previous daily high low, your previous week high low, and your previous month high low. Nothing else. Very simple indicator. So for example, right here on this level, we see our previous week's high. And right here we see our current high of the day and our current high or new high of the week, basically. Just a little tool. Always finding those bugs in live session. Or you said the R level are 95% respected on Wednesdays according to lens. We can quickly check the lens if you want. DXY is still holding some resistance here. Nasdaq pulling back right into here. Let's check the DR lens quickly. See if the inner circle trader tweeted something. Just gonna watch that before we.
Bullish order block. I'm gonna aim for Tuesday's high in a condition that I already know is pretty shitty anyway.
Sell side taking out, forcing a trade right here. I assume it's paper. Let's skip through that.
Correct. If this were a bullish scenario.
Enter right here on this candle. Nice ICT candle. Inside of this fair value gap volume imbalance right here. And his average entry is right around this level, so I assume he scaled in with 6 contracts on a full chart into this trade here. Probably already entered a few times on this move to the downside, because otherwise his average entry level right here, where this blue line is sitting, wouldn't be all the way up there. Or maybe he just entered on this level, I don't know. Don't think he's entering with 6 contracts straight away. So let's see, let's keep skipping through that video. And those equal highs that I also draw up on the chart, the buy side liquidity, 1 contract above here, buy side above Tuesday's high, buy side liquidity, 1 contract off above here. Took 1 contract off, and I think it moved below here and he got stopped out at break even or with some minor profits. Nice to see what ICT is doing, and that it's in line with our analysis. Let's stop this video. So we go over to the DR lens, refresh the DR lens, go over to the IDR. We want to check the entire data set on the E-mini S&P 500. We go over to the dashboard. So generally speaking, on Wednesdays, the daily dashboard, we get 96% of the time. So over the last 20 years, we had a confirmation during the IDR on Wednesdays. 73.5% of them were true. So basically meaning that either the DR high or DR low kept holding as the session low for the IDR session. Generally speaking, on Wednesdays, we see a higher probability that it's going to be a long confirmation today. But of course, that's over the statistics over 20 years. So we see at almost 90% of the times we get a retracement after a confirmation and back into the DR. The average mean standard deviation to the upside would be 0.8. Mean standard deviation down 0.7, and our average confirmation time on Wednesdays is at 11:28, compared to autumn month in January 11:31, and week 3 seasonal dashboard. So over last 20 years, every time in week 3 of the calendar year, 11:30. So roughly by 11:30 we should see our, should I be seeing a chart? Ideally, if you're watching the stream, I hope my screen is still being shared and someone else is also restreaming the stream, and I will be uploading the recording of the stream to my YouTube channel later on. That's the name of the YouTube channel. The link for that is already in this thing here. Let's go over to the distributions. We go unfiltered right here, not distributions. And let's have a look. So we're looking at all for the IDR session. We still have to wait for the confirmation, but looking at the statistical data for the average confirmed time would be just at 11:30. Same goes here. So we get rid of those confirmations later during the day and see what the distributions are going to look like. 12:30, 12, 11:30. Let's leave those two on here. So somewhere around this range we should see a confirmation today, between 11 and 12. I think that's right in the middle of it. So overall we see that the max extension median time should be around 1:45 p.m. New York local time. The median max retracement should be 0.5x. The median standard deviations, depending on to which side we're going to confirm. If we're going to confirm long, the median standard deviation to the upside should be 1.1. Short, the hour is going to hold true, so 1.3 if we're going to get a confirmation to the downside. And also 1.2 if we get the confirmation to the long direction with a smaller median retracement. And for short, a 0.4 retracement. You can screenshot that data if you want, but other than that, if you don't have access. And we saw a beautiful move to the upside. So let's check that out. So we finally moved above here. Also, ICT got stopped out in this choppy market, so don't be too harsh on yourself if you took a trade inside of here and now the market is finally moving into the direction you anticipated. Would have had to place a very tolerant stop loss in order to not be taken out. Who's talking? Who's not muting their mic? I know you're here somewhere. Maybe Mary Jo. Okay, let me have a look. Oh, that's super annoying. Pain in the ass. Where do we have here? Yeah, there we go. Server mute, and that shouldn't be too annoying anymore. So we haven't touched the 830 high right as of right now. So we're still waiting for that to play out. On Nasdaq, I think we should have already taken out that high. Yep. Nasdaq is currently leading the move, obviously. We are way above the 830 high. We pulled back inside of this fair value gap right here for the continuation move further to the upside. So Nasdaq obviously is leading the move currently. We should see the S&P follow. Not sure about what the Dow Jones is doing these days. I mean, relatively speaking, on a higher time frame perspective, we're rather down low compared to the other indices, because YM had a big dump, I think, yesterday or Monday, compared to the other indices that stayed up high rather strongly. Okay, so we still did not take out this high on a 1 minute time frame. We're still waiting for that. And the next draw on liquidity, if you're in a long position, would be the previous day high right here from Tuesday the 17th of January at 40.35 and a quarter. After that, ICT also mentioned the 40.40 level as a potential draw on liquidity once we took out this level. Let's look at the DXY. The DXY is basically still on that same position, being rejected or consolidating around our low of the month, or prior low of the month, until we formed this low right here. Pound US dollar should also be doing something very similar, just ranging basically. So I'd say it's gonna make patience. We just open up with a new hourly candle, and I'm not sure about maybe also the last 4 hourly candle open up at 9 p.m. New York local time. So it's gonna open up at right after lunchtime. That's when the next 4 hourly candle is gonna open up. So at 1 p.m. New York local time. Volume imbalances. I think we almost didn't leave any important volume imbalances behind. Last time we got rejected from a 5-minute volume imbalance right here. Institutional levels, we already went through those quite a few times. But yeah, we see that Nasdaq is leading that move. We didn't have any major SMT divergence unless we compare some of those, yeah, not really that important wicks here to the downside. But other than that, yeah, Nasdaq is definitely leading. So Nasdaq was a nice entry. We pretty much got the same entry here on the S&P inside of this fair value gap, but therefore you would have actually taken on that risk. I mean, inside of this choppy market, we could see if maybe ICT tweeted something. That's the only thing that's really interesting in days like, or in sessions like this. Tuesday high buy side liquidity. Yeah, that's the trade he took. Yeah, I think that's the same one. Okay, so he scaled into this position. That makes more sense now. All right. Again, if there are any other questions or someone wants to see the DR lens statistics again for today, if we get confirmed like around the average confirmation time for Wednesday specifically during the IDR session, those are the stats. In case you missed out on getting access to the DR lens or DR or drive, or however you want to call it. Take a screenshot for later on. So that's going to be if the DR rule, let's go for both, for long. Just want to take a screenshot of that because I'm going to be ending the stream shortly, I think, or at least going to take a quick break. Those are the stats for if we get confirmed inside of our average time here. That's the distribution for shorts. This is the distribution for all, and if the DR rule holds true, that's what it's going to look like, and for invalid, that's what it's going to look like. If it was too quick and you want me to go over one setting specifically, just send it into the Discord chat right here. Yeah, but unfortunately, my streams actually tend to happen during, according to ICT, shitty market conditions, where you have to force trades, basically. That's usually never a good idea. So we start to see some more divergence, definitely with Nasdaq leading the move here. And YM, whatever YM is doing, pretty much like yesterday, where YM dropped hectically. And the S&P 500 and Nasdaq at least didn't drop by that much. All right, so now the S&P seems to be picking up some momentum. Let's see if we can break above our 830 open or 830 high right here. No sound. I'm not sure. That shouldn't be up to me. I think my microphone is working right now. All right, and we broke through the 830 high. Perfect. So the next run on liquidity would be our previous day high, which is also the week high of the week, basically, the current week's high. Next, strong liquidity. I always like to label those things together, so I don't have to look at a higher time frame chart every time. But it's pretty simple to keep monitoring current week high, previous day's high, sell side liquidity by looking at it from a higher time frame, or zoomed out at least, looking at the bigger picture, you could say. Let's get rid of that, all the unnecessary stuff that we drew up earlier. It's messing up the beautiful chart right here. So we formed our opening range here above our previous week's high, and went back inside of our previous week's range. We formed our initial balance, or our opening range, basically, with our low of the week right here on Monday and our high of the week, moving back inside of our range on Tuesday, expanding the range to the upside during the New York kill zone. I think most of you guys remember that. While on the Dow Jones chart, we already broke the Monday's low and continued further to the downside, and we ended up somewhere below this level on the Dow Jones. That's why everything... No sound? Oh no, okay, I misread that. That's why I don't know, I don't like that divergence. That's that big divergence that's currently happening between the US indices. Overall, in my opinion, I think that the S&P and Nasdaq are destined to drop, but I don't know, we could be in a little hopium rally for the month of January, starting into the new year with high hopes and everyone investing their money back into Bitcoin and other cryptocurrencies, and until being dumped on. Who knows? I'm not sure. I'm just speculating here. But overall, yeah, we expanded the opening range for Monday to the upside here during the New York kill zone, and then went straight back to where our previous day low from our opening range. Taking a short from your previous day high to your previous day low would have been a nice... Let's turn on the institutional levels indicator so we don't have to measure. Yeah, let's say 25 handle movement from our previous day high roughly to our previous day low, which was just below the 000 key institutional level. So let's turn that off again. So we expanded the range to both directions, and now we have a new weekly high that was formed on Tuesday and a new weekly low. So most of the times what we see is that we are gonna expand. So if we consider this as the opening range, I consider this as the initial balance, and that really helps me putting bigger picture in perspective. So we now have our initial balance with our high and lows that were formed on Tuesday, right here and right here. Our opening range with our highs right here. Let's make this in a different color. Let's make this orange. And make this orange as well. That's our opening range, high and low, already expanded out into both directions, basically. And most of the time what we see is that we are only going to be continue expanding into one direction throughout the rest of the week. And most of the time on Friday, we either continue make our high of the week, basically, like for example here, or a reversal back inside of our initial balance opening range. You can go through time, and that really holds true. So basically draw up your opening range. So what example could we do? Let's do last week, for example. So we started in this week. So let's quickly draw up New York local time midnight. So we open up here on Sunday. We had Monday, New York local time midnight. Quick example. Yeah, no, that's wrong. So Tuesday, switch over to Tuesday is right around here. Oh, come on. Someone's not muted. Come on. I can hear you.
just keep bouncing us around here.
Server mute.
Text still looks.
Come on, who's Will? It's you. Okay, gotcha. All right, so let's go back. Let's look at the initial balance opening range concept. So we have Monday, we have Tuesday right here, and we have Wednesday right here, and we have Thursday, switch over to Friday right here. Okay, let's do this and let's quickly draw this up. So we basically pretty much as very similar to last week in this expansion move to the upside, we had our previous week's high right here on this candle. I think that was the NFP news high right here. So this used to be our previous week's high. We can draw this up. We went above it, pretty similar. We went above it, consolidated, and went back below it, filling the opening gap. This week we did not get a major opening gap, so nothing really to draw up here. Let's use the opening gap template. But basically, we formed our initial our opening range on Monday right here, Monday's high, and Monday's low. We went below our initial opening range, basically forming our initial balance right here. So we went below Monday's low, triggering shorts into the market for a quick reversal, a quick stop hunt of those. And next to that previous day low, we also had our 00 level of 3,900, an institutional level at the same level that we have been rejected from 1, 2, 3, then the consolidation below, and a fourth time right here for the continuation back inside of our opening range that was created on Monday. So we now have the initial balance basically with our Monday's high and our Tuesday's low formed. And if we drag out those levels throughout the week, we see that the low on Tuesday, so most of the time you will see either the high or the low of the week. Come on, Zanzibar. You can mute your mic. Oh, perfect, thank you. Most of the times you see the high or the low of the week being created either on Monday or Tuesday. That's why that opening range and initial balance is very handy. So we saw the low of the week being created right below our 00 level, below our previous day low, forming the low of the week for the expansion to the upside, coming back inside of our opening range basically that we formed on Monday quite a few times for our high of the week right here on Friday. And we will see how this week is going to develop basically. So we also had our opening range on Monday. We went below our Monday's low here on Tuesday. Looking at it, looks pretty similar, but we also already expanded here to the upside above our opening range. So we will see which one of those levels is going to play out as our low or high of the week. It's going to be interesting. Some levels to watch. Right now, still choppiness, no proper movement. We have 10 more minutes until our DR range is confirmed. The DXY finally moved back above our prior monthly low. The pound US dollar should be dropping according to that. Let's compare our charts right here. Currently holding some support right around this level, but Nasdaq obviously formed. Now, well, I think you couldn't call it SMT divergence, but some sort of SMT divergence definitely compared to YM. Just bringing it to our attention. Where's the 8:30 opening? This is our 8:30 range basically, and we're still inside that 8:30 range. On the S&P, we at least expanded that range to the upside, and on Nasdaq we're looking at this. So I like to look at price action boxes most of the time, because That's clearing out a lot of stuff. So let's see, we got a major pullback inside of our box basically after expanding it to the upside on Nasdaq already. We broke out to the downside of our box on Dow Jones. So Dow Jones is pretty weak currently. We're about to go below. Oh, we are dropping. We are dropping. Let's go to our 5-minute time frame. A little bit better view. And get rid of all those drawings right now. So our 830 high, our 830 low. Not really something you want to trade. All right, let's have a look. We had this little triangle forming this morning where we triggered shorts and longs and then liquidated them quickly. We still have those two equal lows right here, from which is basically the current low of the day. Sell side liquidity below equal lows, and that's also our daily low. That's why it's colored in red. We took out that Asia high, so that's already ran for. We did not touch the current week's high or our previous day high or our initial balance high, so we will see. Today's Wednesday is going to be a great indication for how the rest of the week, basically the week's template, is going to set up what it's going to do for Thursday leading into Friday. Pretty deep retracement right here. We wicked below the slow, so Dow Jones, it could be a sign of weakness for all the US indices, but we will see. Overall, if I would have to bet money, and I'm not betting money, I would say that US indices are destined to dump. I'm not sure how it's going to play out, but I don't know. I called the move up to 4,000, starting from 3,900 right here. I think 3,900 right here, from here, after I saw this initial balance forming and this consolidation below our previous day low. Pretty certain that this thing is walking up during the CPI news event week to the 4,000 level. That's exactly what we got. And right now we're still some sort inside of this range, and I'm not really sure if we're gonna continue up higher through this range or if this was all just created to take out sell side liquidity below major lows here, 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 here. We could be doing this for ages, creating sell side liquidity here, here. Come on. If you think in boxes, there's plenty of space to fall. And Dow Jones is already leading, being somewhere below the slow, or maybe back inside again, but we will see how the weekly template is going to play out. If we look at it on a higher time frame perspective. What are we looking at? We had this big wick right here. Above this fair value gap on the ES, we filled in this fair value gap. There are no major fair value gaps further to the downside other than this one right here. We had 1, 2, 3, 4, 5, yeah, almost, no, 1, 2, 3, 4, 5, 6 bullish candles in a row. Of course, they were 2 red days in between, but not really significant red days with lots of movement for the downside. So almost close on a red day where it opened. So we will see how that's going to play out. If we get a trend continuation to the upside, maybe taking out buy side liquidity here. Over the long term, of course, we could be looking at relative equal highs up here and buy side liquidity up here. But this would bring us, essentially would bring us back to bullish market structure, because here we found a low, we pulled back, breaking market structure here, trapping longs basically into the market, forming a new lower low, I mean, someone would argue that we already had a break into bullish market structure, breaking through this short-term high, basically. So we will see how everything's going to play out over the long run. But overall, I'd say, yeah, I don't know. I don't like this movement to the upside. But that's just me. We're scalping anyway, so it's not like we're holding, most of us at least, holding major swings for more than 100 or 50 handles. I mean, no one's really doing that here, or at least inside of the DR Academy. We usually have very, let's say, very short targets with a great risk-reward ratio, so a overall great trading opportunity, but we're not looking forward to swing trade from a monthly or weekly high all the way down to our previous monthly low or whatsoever. So we're not really doing that within the DR IDR concept. So of course, it's always important to know your draws on liquidity. That's why I draw up the weekly template and at least where our previous week high and low was, depending on the setup of the weekly template. All right, we should have formed our DR very soon. And as of right now, it looks like shit, if I might say so. Our DR is basically RDR is basically inside of our 8:30 AM opening, but looking at the models, I think you guys should be able to tell me what does this, let's say, for example, just look at this chart. What model do you think of this could be? Right into the chat. Little question here. We've got the first answer, yeah. Search and destroy. Now, we're not in Call of Duty, unfortunately. That would be nice. Would be a shit round, to be honest. So, but overall, I'd say we are in upside expansion. Let's say we disregard our previous New York range, make it simple for ourselves. We have our Asian range right here. London open up, or basically the London range, the ODR was formed way above the Asian range, basically right here. And New York, as of right now, the DR range should be closing in 3 minutes 20. If that last 5-minute candle is not going to destroy everything, we have our RDR low above the 50 level from our ODR. We have our 50 level of the RDR above the DR high, so everything's looking like upside expansion right now. So for the upside expansion targets, we could be looking at definitely our current week's high, the previous day high. Let me draw up a little price note. That's nice that we actually saw this. So let's go over to text, price label, our previous week's high right here. Our Asia highs, we already took those ones out. 40-40 is pretty obvious. That's already on the chart. But overall, this would be our next draw on liquidity, the 40, 35 and a quarter level right here. The next one would be 40-40 right here. And after that, I'd say the next institutional key level would be the half level for the next 50 handle range right here at 40-50. So let's see, our range is about to close in 2 minutes. If our IDR low and IDR high is not going to be modified anymore, we should be able to draw our DR range. We can go back to our blah blah to our DR lens dashboard. I haven't been using it a lot, too much to be honest, because I don't know, gotta get more used to it. That's why I'm doing it right now. So if you have any tips for me, definitely send it into the chat. Let's go over to distributions and assume for upside expansion, we're gonna confirm long. The DR rule is gonna hold true, and we're gonna confirm roughly around our average confirmation time. So we should see a confirmation above this high roughly around 11:30 based on the data. So let's say right here, this is where we should see our confirmation. Right around, yeah, here. So we still have a little ways to go. The DR range is now officially 40 more seconds. So let's quickly check out the DR lens. So we have the tendency to confirm long. The DR rule holds true for the IDR session for 80%. The mean standard deviation up would be 0.6, mean standard deviation down 0.5. And overall, the median standard deviation, if the DR rule holds true for the IDR, and we get a confirmation into the long direction. We can also filter by the time of the day, so we don't want to get the data for very late confirmations, because we also have some news on the calendar later on, a few FOMC members speaking. Let's say for the confirmation up until 12:30 from our average confirmation time, 11:30, yep. So median standard deviation to the upside would be 1.2. We get a 87.9% chances that price is going to return into our DR range. So let's draw this up on chart. Okay, our DR range is now formed. 1.2 deviations up here would be above the previous day's high. This is all looking a little bit too messy for my liking. So we're gonna get rid of a few standard deviations. I mean, that's what I don't like. I mean, those big gaps on both sides between the DR low and the IDR low and the IDR high and the DR, I don't like that. I mean, now everything's so narrow. So if I would be to use the DR high and the DR low, things would make a little bit more sense, because now our, hang on, minus 1.5, 1.5, 0.5. Okay, yeah, so basically our 0.5 standard deviation to the downside would now mean that we take out sell side liquidity below the equal lows right here by using the DR high and DR low. I know not technically or specifically the rules. Makes a little bit more sense to me taking those levels. Everything, otherwise everything's going to be super squished together. I know it's not according to the data, but also our 0.5 standard deviation to the upside would bring us above the 40-40 level. If we drag it together again, we would have to reach a negative 1.5 standard deviation. But I mean, yeah, I think it should be working out. I don't like the general setup, this whole consolidation, all those wicks. I would wait for a clear trend direction or indication for a trend direction. This is the first time I catch this live. Will you be doing these more often? They are great for getting familiar with the new platform. Also the free education from you. So appreciate it. Yes, I will be doing them more regular, more often, but I'm not sure about a schedule, because when I'm streaming live, that means I can't trade. And I like to scalp the New York kill zone. And doing both things at the same time is, at least for me, impossible. Trading with live money or with my funded account, so that's not really something that's in the cards. So every now and then, and if I feel like it, most of the times, once or twice per week, I send that message into the general chat, and I'm gonna be uploading the recording to my YouTube channel. The YouTube channel is called The Accumulation Zone. In the most recent video, we have the links for all the indicators. So if you want to add them to your chart, you can feel free to do so. All right, pretty boring price action for the whole New York kill zone. I basically started streaming around what time? I think 8:05, and so far, really ugly. Let's maybe check some ICT tweets or compare our indices first. Maybe that's a little bit more fun. So we have the S&P, we have Nasdaq, and we have YM tanking, continuing to tank, almost about to take out our previous day low right here from Tuesday as a reference point. This is the low, our previous or current week's low, previous day's low right here. And YM is already this close to taking it out. Of course, everything's relative, so yeah, I mean, it speaks for itself. Would be interesting to see because we have the upside expansion model basically confirmed. So we will see how that's going to play out. Let's look at the DXY. The DXY range also formed. Let's see what kind of confirmation we get around this level. I bet some of the pattern traders might have already identified some sort of a head and shoulder pattern. Right here, if we break it down to a 1 minute time frame, we see our left shoulder right here. We see our right shoulder. We see our head being formed with our neckline. The question is, where would we draw our neckline? I'd say right around this level. So we could measure this range further to the upside for a pullback, a inverted head and shoulder pattern right below, right at our monthly low for the month for January, for a continuation move further to the upside, which could lead for a drop, the trade drop on the indices, but we will see. It's just pattern trading, and yeah, most patterns fail, depend on where they sit. But I mean, head and shoulder patterns, if you really identify them as one, they hold their win rate and their probabilities as well. Okay, YM officially took out the low of the week right here, formed yesterday on Tuesday, the 17th of January. So this might be an indication for the other two indices to follow that move. But overall, I mean, we saw something very similar yesterday already. I mean, look at the drop we had yesterday on YM. That's okay. Here's Monday, 9:30, and then Tuesday, London kill zone right around this time. And we open up with New York. We pulled back above our London highs, London relative equal highs here, really zoomed out here for the continuation move further to the downside. This was a impactful move, and at the same time, we did not see anything similar to that on Nasdaq. I mean, where's that drop? That drop happened right around this time right here, where our Nasdaq and the S&P both pumped to the upside. So something's off here. Yeah, we will see how that's playing out. An interesting week, that's for sure. An interesting New York session. And a long live stream. How long have I been streaming for now? I always forget about the time. 2.5 hours. Great. Nice. The DXY. Let's see. Unfortunately, there's no data on the DR lens for the DXY yet. No, there's only data for the S&P, Nasdaq, and the E-mini Dow Jones. We will see how that's going to hold up, and depending on what confirmation we get. But according to the upside expansion model, which it clearly is, do I have the upside expansion model somewhere in my computer? I don't think so. I think at least not as of right now. Somewhere in a chat probably. Let's check for ICT's Twitter. I think he's still taking off until the PM session today. Nothing interesting. For 008 and 4010 has sell side. He mentioned that earlier. If it were any other day, I'd short here into 4008. I proved we can determine when big moves come, and how now I proved we can know when it's not good to trade. Mentorship in words. Knowing how to enter trades, order blocks, breakers, optimum trade entries, fair value gaps, or whatever is not enough. You need to know when the market is not going to lay green in your salad. This was today's lesson. Alright, guys. Note that down. You're gonna know when the market is not going to lay green in your salad. This was today's lesson. Was I effective in teaching what I outlined last night? Now look at price, what it has done, that you can say was a clean delivery. No, not really. There he forced a low probability trade in poor trading conditions. And like drawn out before, okay, we might get our bullish DXY confirmation, which could lead for the drop right here, to the drop right here, and head and shoulder pattern, inverted head and shoulder pattern. There we go. So cheers to all the pattern traders. They tend to work around key levels. For example, we just formed the low of the month for January on the DXY, keeping that in mind, with the prior low of the month right here from Monday the 15th of January. Now with this possible reversal back inside of our range after, come on, back inside of our range of our previous day's high and low. So if we turn on Session Pro here quickly, here's New York local time midnight. Our previous day low, previous day high. So we could be going back inside of this range, which could lead to this drop down to the sell side liquidity that ICT mentioned right below 40.10, which would be the 830 low, our ODR, IDR low, or DR low, ODR, IDR low, and ODR, DR low. Yeah. And equal low sell side liquidity right here at 4007.5 or 4008. And maybe even our current week's low, since we failed to break above our current week's high. We will see. ICT's buy side liquidity targets have not been hit. Yeah, we will see how the rest is going to play out. Let's see how Nasdaq is holding up. Next major level I would monitor would be 1410. Right here, our 830 low. Both on Nasdaq and the S&P. I mean, Dow Jones already showed the weakness here and yesterday, so we will see how that's going to play out. Let's go back to Twitter. So that's everything that ICT tweeted. Right, other than that, there's nothing we can do until we wait for our bias confirmation, basically. So we know that the DXY confirmed bullish on a 5-minute time frame. We got that confirmation right here. And we know that the IDR, regular session defining range, holds true 78.87% of the time. So that this low right here at 101.534 is going to be the low for the session, the low for the day, and the low for the month, at least for today. And the low for the week. Forgot about that one. All right, so overall, we also got the bearish confirmation on ES. So we could be looking at our DR lens stats now. It's interesting because theoretically we have the upside expansion model. So as of right now, I would stay the fuck away from the chart, or at least from your live account. You can still trade paper, but we've got our confirmation short. Let's go for both. And our confirmation short was, let's look at the time right here, 10:30. So between 10 and 11 a.m. New York local time. 10:35? Yeah, that should be right. So perfect. Let's look at let's say our rule holds true also for the DXY and everything is going to drop a little bit. We would be looking at a median standard deviation extension to the downside of 1.5. And we should hit that deviation by 1:50 p.m. So let's see, on the median max retracements, it should be 0.4. So that's all done live. If I'm making a mistake, I'm really sorry about it. I'm using that data also just for the past few days. So if we use our retracement, which would be from the DR IDR low, 1.7 would have already been hit. We just tapped into the sell side liquidity below the 4008 level right here on the S&P 500. So our target, according to the DR lens, would have already been hit for the median standard deviation extension to the downside. And it should have been hit by this time, but we already dropped down to that level because of this shitty IDR level. So if we would be using the DR high and the DR low right here, let me grab this for a little bit, and for an extension of that range, we just hit the 0.5, and to get down to a 1.7 standard deviation, we would have to break below our current week's low, which could be likely. We will see. So we definitely from the shit range, in my opinion, RDR range at least. We broke below our ODR. We have to wait until for 10 more seconds if we see if we close above it. But very likely our ODR level is not really going to hold support unless they're going to take the sell side liquidity out here to quickly reverse the market back up. But then we would have an invalid day. And I'd say we would be looking at a, let's say we have DR rule is false. Confirmation direction short. Confirmation time of the day, we would be looking at a median standard deviation to the upside of 0.6, 0.8. So I'm not sure exactly how the master is using all that data, but I think the R rule try all, not true or false on DR lens. Okay, let's go for all. But I mean, we already have the confirmation direction and the time. So yeah, medium standard deviation would be 1.2, max retracement 0.7. And the max extension median time would be 12:30. And I mean, we're pretty far away from that. And we theoretically already hit our target measuring from our IDR high and IDR low. I mean, just to show it again. (1.7, 1.2, whatever, we already hit the -2 standard deviation, so our target, according to the DR lens, would have already been hit. If I'm not, yeah. And I mean, that's what I don't like about this RDR range is that our -0.5 standard deviation is inside our range between the IDR low and a DR low. So we're basically forced to use those levels for it to, let's say, make a little bit more sense. Someone's not muted. Okay, I think the person muted himself. Thank you up. He didn't. No. Quickly do that. It's just annoying. Well, you can tell me what I should do now. So Gabriel DR rule, try all, blah, blah, blah. So now we should look for long, to be honest, because we already hit our target. Well, according to the data, we should be looking for long. We have the upside expansion model. Yes, I agree. But we took out sell side liquidity below our current day's low. We formed a new daily low. We took out that sell side liquidity so we can mark it with an X. Previous week high is gonna go back over here. Our current week's low. Well, of course, because we already hit target, we should be looking for long. So we could be maybe looking at a market maker buy model from ICT for a potential reversal on a 1 minute time frame. But yeah, I don't know. I'm not sure about it. I would just stay away. If you caught that short, maybe right here. If you anticipated that short based on this rejection to the downside, this 1 minute fill of this fair value gap right here with the pretty much momentum shifting candle right here outside of this small consolidation right here, that would have been a nice, let's see how many ticks to our previous to our sell side liquidity right here. 60 ticks, 15 handle movement. Guess this would have been a very nice scalp here with the target to the sell side liquidity. So yeah, I know the data is there and we already hit the standard deviation target to the downside. But at least for demo trading, of course, try it out 100%. If you have access to the DR IDR, theoretically, according to the data, we shouldn't see much more downside continuation. But it's also not the median time. So if you think about it, we should have hit that target to the downside by 12:30. Look at the time right now. It's 10:48, 10:49. That's 1.5 hours, 1 hour, 40 minutes away from when we should have hit that target, theoretically. So, yeah, and yeah, in my opinion, it's just data of every day over 20 years that's averaged out. So it's not gonna, of course, it's lots of data, biggest amount of data I have seen in the trading game so far, according to strategies and stuff, but this is not gonna mean that every day is gonna respect the average levels over the past 20 years. Average. And yeah, because we should have hit our target by 12:30 according to the very early confirmation. We didn't even get a pullback inside of our range yet. 12:30, that's when we should have hit that target. Looking for longs now, yeah, maybe we get a retirement Asia setup, or but if we expand our initial balance range from Tuesday further to the downside, I mean, let's look at the other indices. Nasdaq is below those lows as well. Yep, below those two equal lows, so below sell side liquidity. Same goes for, so basically the sell side liquidity, that's what I'm talking about. Relative equal lows right here, went below it. Filled the rest of this Asia fair value gap. YM already left the chat a long time ago, yesterday basically. So overall, with regards of the YM basically having this drop from here already, forming this high of the week currently on Tuesday, I don't know. Of course, looking for a retracement back into our range, of course, could be a valid long since we already hit our target. But that would have would need to be, for me to take this trade, a pretty good setup. And it's not like we hit our target to the tick, like for example in the Masters live stream there, because if we look at our standard deviations, if we draw it from where all the data has been taken from, so let's have a look. Our data came from here. Ah, fuck off, would you? Come on, where's my fib? There. According to that, we already hit a -2.25 standard deviation after the confirmation long. So that's pretty much double that we should have reached according to the data. After a short confirmation, let's say we assume that the DR rule holds true for today. So we're not going to break the DR high today. We should be looking at a median standard deviation to the downside of 1.5 by 1:50 p.m. Well, fuck me, that's quite some time away from now. So we could, of course, we could be looking at a pullback movement, but yeah, don't try catching a falling knife. Of course, if it works out, it's most of the time pretty profitable, but you can burn your fingers or cut your fingers on the way to the downside while it's still falling. So that's just my opinion. Of course, if you have a different opinion, don't let that opinion be biased by my opinion. You have your opinion for a reason. DXY continues rallying up higher after a bullish confirmation to the upside. $830 high, took out buy side on Nasdaq. We took out some more buy side liquidity. both indices continue to drop. Looking at the S&P 500, we're already below. Now we're still negative 2.25 standard deviations roughly. So I'd be careful trying to catch a reversal based on data. Still dropping, about to hit the negative 2.5 standard deviation. I'd say the perfect entry would have been, yeah, it's hard to call it perfect entry. I mean, ICT also said he's going to be on the sidelines until the PM session, which is going to start right here. So yeah, I mean, we're going to see what happens within that time. We're still dropping, still looking like a falling knife. We will see. I don't even want to see what YM is doing if already the S&P and stuff is dropping like it's hot. YM's definitely not showing strength. Also showing, yeah, huge S&T divergences. I mean, I've covered it a few times. Look at it on a daily perspective. Nice little 3-bar push. And see that that continues higher. We have our ODR range right around this level. We will see. Not really certain at this time. We're still falling. We now have hit negative 2.75 standard deviation roughly. So we will see. Of course, getting into a scalp for the further to the downside could have been very lucrative. For example, there were a few fair value gap entries that you could have taken. We had a volume imbalance here, didn't get filled, but we filled this fair value gap right here for the continuation move to the downside. We filled a fair value gap right there, right here. But other than that, other than this nice fair value gap, big fair value gap, a momentum shifting candle could have been an indication, but still nothing really certain within this weakening range of the DR. I mean, look at the gaps between the DR low and the IDR low and the IDR high and the DR high. There's space every time there's a big space between those two levels. Blank space basically tells you there have been a lot of wicks during that 1 hour of the market open, telling you, indicating you indecision and stuff like that. So not really ideal, in my opinion. I mean, we could be looking at some sort of, let me check it on NASDAQ 1 minute. I mean, we formed a new high here. So we have our most recent short-term low right here. We broke structure. We broke even more short-term structure, but we did not break below those lows. We got a pullback filling this fair value gap for the continuation move further to the downside into sell side liquidity below equal lows. Matching up with euros would have been a nice short. We're now at the 000 level again. 40,000, 4,000 right here. We already hit negative 3 standard deviations according to the IDR range. 3982.5. 3982.5. Somewhere around here. Nah, come on, screw it. Let's go on a higher time frame. I'd say if we continue going further to the downside, let me get rid of the drive for now and zoom out here a little bit. I'd say the overall next target. So here's our current week's low. We were about to touch that. We have the sell side liquidity equal lows. We already took that one out. Let's get rid of that DR range because it's whack already today. Our Asia high that we took out, our current high of the week right here. Asia high, sell side liquidity, both of them have been taken out. We did not reach our buy side liquidity targets by ICT. We have our initial balance high, our Tuesday's high, previous day high, current week's high. Just mentioning all that. Opening range low has been broken on Tuesday, and on Tuesday we currently formed our previous day low and our current week's low, so this would be the overall sell side liquidity target, at least for today's range. We couldn't make it above the previous day high. We failed with this breakout basically. So now we get a slight pullback, maybe inside of this range, but I think they're gonna target this sell side liquidity surely. I mean, we just got rejected by it from maybe 1 or 2 ticks. And because if we compare it to what we see on the Dow Jones, let me duplicate the step here quickly. No, screw it, that's too complicated. Let's split the screen here and go for the YM1. I think everyone saw that, but just in case you'd missed it yesterday. So we're looking basically at the same chart. Here's this low right here. I'm gonna mark it up. We have this low right here on the S&P 500 and this low right there on the E-mini Dow Jones. We formed our high of the week, basically our opening range on Monday as well, right here. Compare it to this high right there. The cursor should align on both charts. High of the week currently formed on Monday. We broke this high on Tuesday, but at the same time, what we see right around 9:30, that's the time. Let me mark this up. That's the New York opening, roughly around that time on both charts. Right here, instead of making this little move to the upside, let me use the, where do we have it? Drawing tool. Yeah, path. Instead of doing this and moving further to the downside to our initial balance low, continuing somewhere around here. Nasdaq broke that high again, I think. Dropping back down. We shifted this whole market structure all the way down till here, back to this low. So there's enough space that's basically a 136 or 140 tick range, 35 handles, that the S&P could very easily drop. We will see. That's the midpoint of the week on 13th. So we will see. That's the low, 3961, and the midpoint of the week on the daily time frame. Yeah, okay, on the daily time frame, the midpoint of the week, that could be interesting if it really holds true. The level was 3982.5, so we're just gonna draw this up. 3982.5. I think if it's gonna drop, it's not gonna stop here, in my opinion. I mean, look at YM. Did it stop somewhere around the midpoint of any wick? I didn't see that, so it's just my opinion. Always great to have your opinion, but I don't know. I don't like this range here. And I'm pretty sure that throughout tomorrow and Friday, we either see the expansion further to the downside or a continuation further to the upside. One of both. After having set up the opening range. The initial balance. Okay, it's not my opinion. ICT talked about it in last night Twitter space release. Didn't he say that the half point of the wick is not a general sell side liquidity target, but if we go below the halfway of this wick, that he would regard the market as bearish again? Pretty sure that's how he's using those midpoints of those daily wicks. So overall, the next target, our previous day low, current low of the week. We'll see how that's going to play out. Here's that midpoint, a target that was talked about in last night's Twitter space from ICT. And that's the target or the level that we already passed on the Dow Jones US 30 index. So yeah, we will see. All right, what's the time? It's already 5:03. Right, it's 5 p.m. And I think I am going to call it a session very soon because I've still got a meeting to attend. I'm already late for the new traders calendar. I'm just gonna put that out there. I'm designing a wall hanging calendar for traders basically because I tend to forget about news myself, and if I write them down somewhere, I lose it because it's just a loose piece of paper, and I'm checking Forex Factory every day, but still sometimes I meet people or talk to people on Discord that forgot, for example, that today or tomorrow is going to be CPI news and whatsoever. So basically a wall calendar for your trading business that you can hang up into your office wall or trading station wall, where you can basically draw in or write in on a nice piece of paper important news events, your daily PLs, your notes throughout the day, your trading rules. You can basically track your whole performance and also over the whole bigger picture. Because what I tend to do is I tend to sign up for subscription services that track my overall performance, but I don't actually keep up with it. So I have my Excel sheet and everything, of course, but I like to write things down on paper. I don't know, I'm just that kind of person that learns also by writing things down on paper. So I thought that might be a good idea. I made one for myself already and I love it. So I decided to also put it out there very soon. So we will see how that's fucking talking now. Thank you very much. Yeah, that's just a trader's calendar. The link for that is in the, I'm gonna paste that in here. It's just called trader's calendar. So we will see. I think that's gonna be the end of the stream. DXY is still looking rather bullish according to the DR lens. Let me just quickly copy and paste that into the chat in case someone's interested in a wall calendar for their trading business. I couldn't find one online, so I made one myself. Let's have a look at the DR lens. We're confirmed short. We already hit the, let's go for all. We already hit the median standard deviations. If you want to take a screenshot of that, those are the stats from the DR lens for today, for the rest of today, because I'm going to be ending the stream. Other than that, I can also click on true, so you have the stats for that, the distribution. We have a confirmation already, so other than that, we can quickly, so I'll give you guys a few more seconds to take a screenshot. Yep, ICT also just tweeted 398250 noted. So he also just referred to, let's go over here, that was enough time to take a screenshot. That was the level that VK just tweeted. Not tweeted, I put in the Discord chat right here. This would be this. Oh, Webcook, here we go. Now we're dropping, and I unfortunately have to end the stream. So we're now forming a new low of the week. So this has been taken out. Sell side liquidity above the Asia high has been taken out. Next target overall for sell side noted down 398250, and the next target after that would be 3961. Let's go for 62, make it simple. Below Friday's low, basically. Last week Friday as an over sell side liquidity target. Very nice play. I mean, the Dow Jones index already more or less confirmed the weakness for the US indices for a possible drop to the downside. So yeah, Nasdaq is also pushing further down. Now below the lows from Tuesday, also at a new low of the week, so there's no divergence between those two indices. So yeah, overall I'd say, let's have a quick look at the DXY. Yeah, indecisive here, but indices are dropping. New low of the week forming right now. Let's zoom in here. Yep. Let's see how this candle is going to close. But the probability is there that the high that we formed on Tuesday right here on our initial balance right at 40.35.25 is gonna fuck off. Why won't you mute your mic? Thank you. Sorry for my language there, but that the high of the week was formed on Tuesday right here at 40.35.25. Let's see if I'm wrong or not, but probability is very high that the high of the week is, or the low of the week is either formed on Monday or Tuesday. That's why opening range initial balance model leading into the week, into the new week. All right, guys, if you have any more questions about anything that I talked about in that 3-hour stream, feel free to ask me that question and I'll do my best job at answering it. I can pull up the DR lens again. If anyone missed screenshotting it, I'm gonna put it on all. Other than that, I think that was a good stream overall. I hope no one tried to catch that reversal based on the data. But other than that, yeah, I think tough session to trade, 100%. I mean, ICT said it very early on that he's on the sidelines, that he's going to be looking at the charts again at around starting off the PM session at 1 p.m. New York local time. Within our beautiful DR IDR range, we saw just a very long consolidation, or let's not say consolidation, but lots of wicks, creating a very ugly RDR pattern, because overall we would have had a beautiful upside expansion model for the day with our DR low above the 50% level of our ODR and our ODR being completely above our ADR. If we would have taken out the SPY side above our Tuesday's high, a reverse opportunity would have been presented, a very nice one actually. After taking out buy side, sharp reversal down, following the Dow Jones index. So yeah, overall a hard session to trade. Especially with the gaps between the IDR high, the DR high, and the IDR low and the DR low. Not really nice, especially if you draw your DR standard deviations right here. I mean, we're already below the -3 standard deviations. If we were to draw it up, no, there's no point in doing that. We're somewhere around, let's measure 3.5, let's say -3.75. So trying to catch a reversal here, since we already took out our mean standard deviation target, does make lots of sense to me. The lens is only for traders that signed up for the membership. Yes, and I think the lens membership is also currently sold out. We are in a daily VIP for ES, so I'm gonna check that quickly before I enter stream. Therefore, we can use the awesome multi-time frame volume imbalance indicator, plot it on the chart, select daily, and here we go. Yep, we're inside a daily volume imbalance, and the next daily volume imbalance area would be right around here. Right at below the slow that we already dropped below of on the Dow Jones index. But thank you for mentioning it. Yes, we are in a daily volume imbalance right here. So let's see how price reacts from that level. But overall, I mean, of course, looking for a retracement after a, let's have a look at how many handles that thing dropped. We dropped by 43, almost 50 handles now to the downside. 50 handle, a 50 handle expansion to the downside would already be ICT's target right here, the midline of the daily candle, right at 398.250. So we will see how that's going to hold up. This daily volume imbalance. Last time we went through it, we saw some support around it, but yeah, we will see how that's going to play out. I don't think that the master already released his. Let me have a look. No, he did not release his volume imbalance indicator, but I released a volume imbalance indicator of from myself basically, or for myself and for the community. The link for those indicators that I released are in the YouTube description below the introduction video and how to use indicator of the multi-time frame volume imbalance indicator. The link is here. There's the institutional levels indicator for the key levels on your chart, the importance of time, the previous day high, previous week, blah, blah, blah indicator also, and the multi-time frame volume imbalance indicator. All you have to do basically is to click on the link. It's going to open up a new tab, and then you're going to go up to my TradingView profile, and all you have to do is click on add to your favorite indicators, and it's done. Then you go over to your TradingView. You click either on reload or duplicate tab, basically refreshing your chart, and then the indicator should pop up in your favorites tab right here, called MTF multi-time frame volume imbalances by Etherman. And then all you have to do is to click on the settings. If you want to use the multi-time frame function, you have to enable this checkbox down here. And with the setting right here, you can modify how many volume imbalances are being displayed on the chart. If you disable this setting right here, only unfilled volume imbalances are going to show up. So yeah, that's why you have to extend it, because most of them already have been filled. At least with 1 week. I did not include the rule yet with 3 candle or body closes of 3 weeks inside of a volume imbalance is already enough for it to be already filled or something. So that's why it's here. But you can sift through all the time frames here in the settings and quickly, for example, check out weekly volume imbalances that we did at the beginning of the stream. We have a weekly volume imbalance right also at this level, so this could be a draw on liquidity or a point where the algo would maybe like to return to. We will see. But overall, a nice drop to the downside, but just pretty hard to get a actual entry, because overall we would have expected a upside expansion model. We had a let's say rather ugly RDR range, basically inside of yesterday's RDR range, also for the ODR range. So we're all putting it into a picture, a consolidation up high, building up liquidity for either a drop further to the downside or a continuation move further to the upside. I'm sorry, how do you do multi-time frame on VIPs? You use the indicator that I just shared and basically click on the settings, and then you have to make sure that all those 3 checkboxes are checked. You can, for example, let's say you want to see the 10 most recent volume imbalances on your chart, then you simply select the time frame. You can go for a 1 hour time frame. Now you're going to see hourly volume imbalances. If you want to see 5 minute, now you're going to see all the 5 minute volume imbalances on your chart, where they are, where the majority of them lays, for example. And if there are multi-time frame volume imbalances missing, it's very likely because of the setting. The max value you can display, TradingView default, would be 100. So there's quite a few volume imbalances there. And if you still don't know how to use the indicator, you can simply watch the video that I just posted. Yeah, all right, guys, I think that's gonna be it for me today for this live stream. Let's see, we're still dropping overall, comparing all 3 indices. Yeah, Dow Jones already left the chat yesterday, so that's not really interesting. Let's compare the S&P 500 with the Dow Jones, with the Nasdaq. Initial balance. Let's go to a 15-minute. That's nice and neutral. So I seem to have drawn up this rough trend line right here. 15-minute time frame. Get rid of all those drawings. They just make it messy. So overall, yeah, very interesting chart pattern. SMT divergence, we went above our initial balance high on NASDAQ. If we look at it right here, okay, just imagine I'm drawing this line right now. Lower highs on S&P, higher highs, way higher highs on the NASDAQ, SMT divergence. Now we will see how far this thing can, or how deep this thing can retrace. We have our low right here, which could be the next round liquidity, or 398250, and target called out by ICT. Thank you very much for watching the stream. I hope you learned something during the stream, and yeah, I will see you next time I'm streaming live. I think there will be, today's Wednesday, maybe on Friday. I usually stream live on Friday, so yeah, maybe on Friday. If not, definitely next week. We will see. Maybe we get some more insights on how to properly use the DR lens, because yeah, I'd say today overall was just a difficult, very difficult session to trade. Looking for retracements now, I mean, yeah, but they would have to be pretty strong retracements. I mean, we're just falling for the past 15, 30, for the past hour. So maybe with the, we just also open up with a new hourly candle right here with this 15-minute candle, and it's still dropping. So short sellers are currently stronger than the bulls. I mean, maybe look at what's happening at around 12 a.m. New York local time, and make sure to check your 4-hour charts. Your 4-hour chart looks rather bearish right now, especially if we compare 4-hour charts for SMT divergence. Higher highs, lower highs. And the next 4-hourly candle is opening up at 2 p.m. New York local time, right here, 2 p.m. New York local time. So, and I think we also have news, yellow for the news around that time, looking into Forex Factory 2 p.m. and FOMC members speaking right around that time. So, yeah, we will see how that's going to play out. So SMT is bullish NASDAQ. SMT would have signaled bearish because we made lower lows and lower highs on both the S&P 500 and US 30. Only NASDAQ continued making higher highs, as basically acting as a liquidity grab, trapping traders long into the market for a quick reversal onto those traders that entered on the breakout. Is the indicator private? I can see it on the web, but can't get it on the desktop app. I sent that link to the YouTube video right here. If you click that link to that YouTube video, hang on, this should happen. The link to the YouTube video should pop up.
Yeah.
And we skip the ads. And then you click on like, of course, otherwise it doesn't work. No, just kidding. But then you, in the description box below, back to a new, you see the multi-time frame indicator. You click on the link. Trading views should open up, and you click on add to your favorite indicators. Once you've done that, you go to your trading view, you click on reload. Now your chart is reloading. Okay, once you close my tab, I usually click on duplicate. Now it's opening up a new chart, and then inside of your favorite indicator section, you should see the multi-time frame volume imbalance indicator. That's a step-by-step tutorial. All right, guys. Yep. Thank you very much for watching the stream. I really enjoyed doing it. So yeah, stay tuned. I'm going to be posting messages or announcements if I'm streaming live, or inside the general chat and the S&P 500 chat. If that server is going to continue to exist, we will see. But I think so. I don't think he's going to shut down this this Discord server. So yeah, if not, I'm just going to be streaming live on YouTube. So you guys know the YouTube channel, so I think it should be all setting case that should be deleted. The DXY playing out the inverted head and shoulder pattern we saw just around this time, pulling up, playing the narrative, pulling back from our low of the month, low of the week, low of the day, back inside of our range, and hence the indices are dropping. If you try catching reversals here, ouch. At least, I mean, you're paying for someone's dinner, or for someone's Lamborghini or Ferrari. All right, guys, let's see how price acts around this level that ICT tweeted out. But I'd say the next, if we continue dropping today, I mean, we already dropped by 50 handles roughly, would be this low right here at 3961. It's a very target very low, but I think it's in the cards. If we look at movement, for example, like here, it's pretty much the same movement, so it's not that unrealistic. All right, guys, take care and trade safe. If you decide to trade this New York session, maybe watch what ICT is tweeting after 1 p.m. right around this time here for the PM session. Maybe he shares some cool insights or some targets that he likes to see taken on. All right, guys, take care and trade safe. Until next time.